Alrighty, so in this video, we're essentially going to go through an entire week's worth of price action on euro dollar, mainly focusing kind of on the development of the higher timeframes, namely the 4-hour and the M15 chart as this week developed. And of course, we will dig into a few of the sort of high probability M1 entries as well. Now, I usually reserve this obviously for the weekly watch list breakdowns in the Photon service. So if you haven't seen that already, make sure that you do that you are aware of where it is. It's if you click the dashboard in the top right hand corner when you're looking at the course, right, it will take you over to the Photon service. So in there every week we do weekly watch list breakdowns where we look at the outlook for the week ahead. We do a bit of a forecast there, but kind of the main value really in those videos is where we spend about 45 minutes to an hour recapping the prior week's price action on euro dollar and looking at the high probability trade setups of that prior week and trying to extract sort of, the main lessons from that prior week. Okay, how trades could have potentially been managed better, what trades could have been avoided, all those things, right, that you should be doing when you are doing your self review and your journal review, right, for your trades. But I just thought this week, or the week that's just gone, that we're about to go through with bar replay, was a very interesting week. I think there was tons of lessons in there. I won't name those lessons now because I think we'll do that at the end because it will make a lot more sense if we first go through the price action and then we kind of recap at the end, and it will be sort of much easier to follow my points when we do that. So without further ado, don't want to ramble on any longer, let's just dive straight into it. So I've basically brought price back to the start of that week. Using a completely blank chart, right? And I think it's always a useful exercise for you guys to see, really how to build your analysis up from scratch. So first step is to go up to your highest time frame that you personally use. For me, that's the weekly chart. So once we're up here, what's the first thing we need to do is we need to be aware of our structure. Okay, so where is our swing high and our swing low? Now, if you've been following the course in chronological order, you've probably seen me break this down on a weekly chart numerous amounts of times, and you don't really need to see me do this in depth too much, but very quickly, right, make sure you always kind of look left at least a little bit enough to make sure you're not suddenly marking up internal structure as your swing range. You want to make sure you've got the correct swing high and swing low. So usually when I do that, I have a quick zoom out and I just look at kind of, where there's a very obvious swing breaker structure. And for me, this was a pretty obvious one, right? We switched bearish over here. Okay, and then we stayed bearish for a fair amount of time with these series of lower lows and lower highs. And then we got a higher high here where we switched bullish very temporarily. It was really volatile back then, right? Pandemic kicking off in March. We then took the low, we switched bearish again, and then we took the high and we switched bullish again. Then we had a swing pullback, then we made a higher high, and then that failed to make a higher high, and we switched bearish again. Okay, so for me, that was the last weekly break of structure. So I'm just going to map on kind of that one as it's the most relevant. Okay, cool. So if that's our last weekly bust, what does that mean? Well, that means we're now bearish and we're trading between this swing high here and this swing low here. Okay, cool. So next step to do is to outline, if we know where our swing high is and our swing low is our nearest and most relevant supply and demand zones. Okay, so clearly we can see the price is currently in this weekly demand zone here. Now, is this a strong demand zone? Well, what are the two main things we look for to validate if a demand zone is strong? Because remember, right, by its most simple definition, a supply zone is a buy to sell candle pivot range, right? Whatever one you want to use. Basically the buy to sell candle that is then engulfed by a bearish candle. Okay, so if I just zoom in to this section in price action, this is a very simple example of what a supply zone is. This candle, right, it's a buy candle that is then engulfed by a bearish candle. So when I say engulfed, all I simply mean with that definition is that price closes below the wick of the prior candle. So you can see how this bearish candle here, it closes below this wick. So this, right, that gives you a weekly supply zone, right, by its very basic standard definition. And then it's the exact opposite for a demand zone. Okay, so you want to see a bearish candle that is then engulfed by a bullish candle. Okay, so that would be your basic demand zone, right? Bearish candle, then the bullish candle closes above it, right? Cool. So quick refresher, that's basic S&D zones, but obviously they're everywhere because if there wasn't supply and demand, price isn't really going to move. So we don't just want to trade from every single random buy to sell or sell to buy. We want to be really ideally looking for the strongest ones, the ones where institutional money has stepped in, or more accurately, we just want to see where was there an overwhelming imbalance between supply and demand, right? Where supply clearly overpowered demand or demand clearly overpowered supply. And then we know there's a fair chance that when price returns to that area, there's likely going to be, either a decent amount of orders being filled or, a decent amount of interest in that level for price to continue in that direction. Okay. So the whole point of me going over this now is to kind of remind you, okay, we can draw on what we call POIs, right? Points of interest like this. This is a classic example where, yes, it's a valid weekly supply zone. It's a buy to sell candle that's engulfed. A lot of momentum came through it, right? And this will definitely be an area where I'll be looking to build trade ideas from, okay? But we have to understand about this weekly supply zone here is, you have to ask yourself, did it do the two, either or both of the two main things that we look for to tell us if it's a strong zone, right? So what are those two main things? One, it either breaks structure. Okay, so it can be any form of structure. It can be internal structure or swing structure. But obviously the more significant the structure that it breaks, then the more significant that zone is going to be, right? Because it took a lot more orders or a lot more supply in order to actually achieve that thing, right? To actually break structure. Okay, so that's the main thing. Did it break structure? Second thing, is it a flip zone? So has it taken out another zone, right? They're the two main things. Ideally it does both. We love them, right? When they break structure and they are a flip zone as well. Okay, now there is a third thing we also look for, right? Is it a sweep zone? Did it sweep liquidity? But generally, the first two things that I just mentioned, does it break structure? And is it a flip zone? They're the two main things that we want to see. And then if it's a sweep zone, that kind of just adds confluence. Okay, but does it break structure? Does it flip another zone? They're the two main things, right? So I'll come back to this zone in a second. The one I want to concentrate on is this that we're talking about. Okay, so we know it's definitely a valid demand zone, right? Whether you take the entire sell to buy range, right? That would be valid. Or if you want to refine it to a single candle, or you can do the fractal refinement down to the wick, okay? They are all valid. Now, that makes it a valid zone, but does it make it a strong zone? Well, what's the first thing we can look at? Did it break structure? Well, yes, we can clearly see that it led to a bullish break of structure over here, right? It led to the weekly chart switching bullish, pretty much a direct break to here. A lot of momentum came in, right? We can see, yes, it clearly did do that. Okay, what's the second thing it could have done? Did it flip another zone? Well, when you see, right, another easy way to think about this is if we are looking for a sell for the buy for a demand zone, right? That sell must have been a reaction from somewhere, right? What caused the price to pull back here? Well, look left and see, okay, we have this big wick. Well, what is this big wick? Well, it's part of this big candle here, right? So this whole bearish candle, right, essentially is a massive supply zone, but it's a bearish candle that's then engulfed by a bearish candle. So, if you're being super strict, it should be a bullish candle that is then engulfed by a bearish candle, right? It should be the buy before the sell. In this case, it wasn't. So what you can do, right, remember, is you can refine it to the wick as it's likely in that fractal refinement. There will be a bullish candle in here in the daily chart or the 8 hour or something like that, right? So essentially prices come in, it's reacted to supply, it's failed to do its job, it's failed to take out the low, and it's failed to form a lower low. So somewhere within here, demand has now stepped into the market to then push price to the upside, okay? So that gives us a clear weekly flip zone to be working with. So this is a pretty decent area, right? Whether you take the whole range, the candle, the wick, whatever, it's a flip that broke structure, obviously caused a fair amount of momentum from this level. Now, it didn't sweep liquidity. There's no clear sweep in here for me, and it doesn't have any inducement in the leg. So what I mean by that, if it had inducement, its price would have come up, it would have pulled back a bit and then continued up. Okay, so there would be structural liquidity behind that low there, okay, and that gives us inducement for this zone here, but of course there isn't in this case, and it didn't sweep any liquidity. It's just a straight pullback and then a straight up move. If it swept liquidity, it would have come up, and then it would have pulled back, and then it would have taken the liquidity behind this low here, right, and then continued up. That would be a sweep, or maybe you get a move like this, where the price pulls back like this, and then it sweeps this low here, and then we go, right? It needs to have taken out essentially a structural low, but in this case, it doesn't happen. It just comes up, it pulls back, and it continues, okay? So that's not a valid weekly sweep. Cool, so there's no sweep, there's no inducement, so from a liquidity perspective, it's not amazing. But for me, this is a very decent weekly POI because it flipped supply and it led to a break of structure, and clearly a lot of momentum, right, came into the market that way. So as price was coming into this level, we have a pretty good indication if it starts to hold that we could potentially see a weekly pullback, or at least weekly demand is most likely going to cause price to at least reach the next weekly supply level, right? At a bare minimum, usually you would expect that. It's not a hard and fast rule, but generally supply and demand zones are going to ping pong between each other. So if we hit a weekly demand and it holds and it starts to move away, generally you can expect that it's going to at least reach the next sort of weekly supply zone, which is what we have here, right? This weekly buy to sell candle, okay? So is this a strong supply zone? Well, we know it's a valid supply zone, but is it a strong one? Well, Does it lead to a break of structure? No, it hasn't broken anything, not even in this leg, okay? Because the internal structure on the weekly chart is you have a down move here, then these candles fail to break the prior candle's low, so you have a pullback, and then all of these candles, they all break the prior candle's low, okay? So that's all one down move. So that buy to sell here did not break any structure in this leg. Okay, cool, but if we look left, did it break anything over here? Well, no, because this is all one up move, right? All of these candles break the prior candle's high, right? There's no structure here at all. So it hasn't broken anything. There's nothing here. There's no structure within here, essentially, that price is broken, okay? So it's not a flip. It didn't break any structure. Okay, so it's not a structural zone. Is it a flip zone? Has it taken out any demand? Well, if we look left, all right, draw this line across. No, it didn't react to anything here on the weekly chart. So it's not a weekly flip zone, okay? So for me, this is just a buy to sell candle that's engulfed. It is a supply zone. It is a weekly supply zone, but it's not a strong weekly zone, okay? So how do we use that information? Well, we can still look potentially for price to come into here and it can still dump, but you have to understand from a weekly chart perspective, it's not that significant. So what price might want to do, okay, you have to bear this in mind, even though it's bearish, it doesn't have to do this, but it might want to pull back up to a more significant or a strong, right? What we call quote unquote strong supply zone, right? Because this zone is a bit different. Did this zone lead to a break of structure? Yes, we can clearly see it actually led to a swing break of structure, okay? So this becomes a much stronger zone. Is it a flip zone? It's a little bit messy, but for me, yes, I would say it is, because we have this large sell to buy that was engulfed, right, by the bullish candle. So this is, yes, a large weekly zone, okay, but price came into it. Obviously there was reactions here and there's another reaction here, but it still meets the rules because it's come into demand, it's reacted, right? This demand this whole time, it never put in a higher high, right? Price did come into it, it tried, but it didn't, okay? And then this would still be part of a flip for me. It's filled up more orders left within here, right? It's reacted, again, failed to put in that high, it never broke the high. And then what's happened is supply has come in and it's pushed price down, okay? So for essentially what that means is this is a much stronger weekly zone because it's flipped and it's led to a break of structure. Okay, cool. That's the two main things we look for. Does it have inducement? Yes, I would argue that this is inducement. It would be ideal if it's a little bit nearer, but that's enough, okay? Because we have a move down, a pullback and a move down, which means there is now structural liquidity behind this high, which can act as inducement for here, right? Inducing buyers into this level for money to sell into, okay? Is it a sweep zone? Well, it's a bit hard to see actually if you didn't quite see this, but I won't draw it on, but essentially if you look where I put my candle in this high, okay, and if you look up here, it tells you the high, low, close and open of the candle. So if you put your mouse back to that candle and then go look up there now, you see how it says the high is 19,087. And then we go on this candle here, the high is 19,091, okay? So I think that's 0.4 pips. So technically this candle here did sweep this high here, right? And that's structural liquidity because you can see price came down. This candle fell to break this candle's low, so price pulled back, and then we came all the way down, okay? Then price comes up. Let me draw that a bit more accurately. It comes up here, right? Down. Price comes up, sweeps the high. Yes, only by 0.4 pips. It's not the most significant, but that is a sweep. Fills some of the orders that are behind that high, and then we sweep that, we flip, and we break structure, and we have inducement. So this zone pretty much ticks all of the boxes, okay? So this would be a strong weekly zone. Now, I appreciate I'm being very, very pedantic here and go through all the details, but it's just so you guys fully understand kind of everything that is going on here. So when it kind of comes into building trade ideas for the week ahead, obviously if you trade like me, pretty much looking for 2 pip stops in $1, looking to capture about 10 to 20 pips on a move, because my personal style is I bank the majority of my volume right around 10R most of the time, right? So you're probably thinking, what's the point? I'm really analyzing the weekly chart. It's not going to give you too much of an edge. But for me, it does. And I think you should be aware of it. I think it can really help you to understand what the bigger picture is, what the overall, really high time frame momentum is going to be, because it's one thing to know, okay, I have my 4-hour chart and I have my M15 and I want to trade in line with those, etc., etc. But you kind of understand that if the 4-hour chart is bullish and we've come into a weekly demand zone, but then you can start to potentially anticipate that the 4-hour might stay bullish for quite a long time, especially, right, if we're going to be going from one strong zone all the way up to the next strong zone, right? There's no guarantees that can be happening, but you can start to build trade ideas around that. This might be a decent trend for us to take advantage of. Then we come up here. Now, if we start to switch bearish, again, you can think, okay, well, maybe the weekly's now fulfilled its objective. If I get in shorts around here, now you can hold with a fair degree of confidence that potentially you can hold on for these large risk to reward trades, okay? So that's why I think it's worth understanding when price has come into these levels that potentially we could be seeing some sustained bullish momentum for a fair amount of time. Okay, now that doesn't mean that I won't disregard these zones. These are still very significant. And, you know, even if this isn't a strong weekly zone, as soon as price comes into here, I'm definitely going to be looking for shorts with the possibility we could take this low. But even if we don't, right, it's a weekly zone. So even if we just get, you know, a couple hundred pips reaction to here, that's a couple hundred pips, 2 pip stop, right? You do the maths, that's around 100R, right? If you get even just the tiniest of weekly reactions from that zone, that's a decent move to take advantage of, right? We might then come back into demand and then we can look for longs and we can push back up to a weekly strong zone, right? So this is why, you know, if anyone of you is wondering why I bother, that's why, because it can still be very useful. Now, if you find it too confusing when you have too many conflicting timeframes, and of course my advice always is to go back to just using 3 timeframes, your higher time frame, your medium time frame, and your lower time frame, 4 hour, M15, and your M1, right? If you find it confusing, but yeah, I do think, you know, you should strive to kind of have an understanding of those higher time frames. So anyway, trying to kind of focus on the week that we're going to go through a price action. This is, you know, what we'll be looking at, you know, on the Sunday when you're doing your analysis. Okay, so we can know that we're coming off a strong weekly zone. There's a decent possibility we could see a sizable weekly pullback. You know, you can do your premium discount if you want, right, from the swing high to the swing low. EQ's all the way up about here, right? So that's another tick in the box for this zone. It's in the premium. Again, absolutely no idea if price is going to come this high. It doesn't have to. We can literally just dump from here. But they're just things we're just trying to build trade ideas around, okay? Next thing I know is, okay, we've seen a bit of a reaction here. Obviously, we'll take a look on the lower time frames in a bit. We've seen a bit of sensitivity. The weekly chart is bearish, right? So there is that possibility anytime we could roll to the downside. But because this high, we look left, hasn't really mitigated anything significant whatsoever on the weekly chart, it's probably, you know, doesn't really mean a lot. It's probably just a short-term move. Potentially, you know, we've got this sell to buy here, right? So this is, again, this is technically, you know, a weekly demand zone because it's a bearish candle that's engulfed by a bullish candle. So intraday we could, or intra-week, we could see price come into here, potentially, fill up those orders, and then come up to here. Because this high, right, I don't want to say a fake high, but so far it hasn't achieved anything, but also it hasn't mitigated anything. So what you can start to build a trade idea around is potentially price is going to come into this sort of nearest, you know, very, very minor demand level to then push price up to this POI. And again, we can potentially look for shorts whilst we may come down and take the low, or maybe we're just going to continue this corrective pullback because remember, counter trend, it's quite corrective, right? Up until we come up to this level. Now it's fulfilled its objective, it's pullback, and then we can go, okay? So they're all kind of ideas that you can use to your advantage, right? That's enough for the weekly chart. Let's dive down to the daily chart and see if we can get a bit more of a clearer picture, okay? So you could probably clean up the weekly fractal refinement to a daily zone, but in this case, even the daily chart wasn't really that clear, to be perfectly honest with you. It's quite messy price action over there. Okay, so again, first thing you want to do, almost forget what you've seen on the weekly chart and just make sure you know what swing range you are playing within in the daily. Now, if you use the 90 pip rule for the daily chart on $1, then this is more than 90 pips, okay? So that would be swing structure for you. Now, as you guys should hopefully know by now, I personally like to use a little bit of discretion on the daily chart for swing structure. I don't use the strict 90 pip rule. The 2 time frames I do try to be 100% mechanical and strict with my swing structure on is only the 4 hour chart and the M15 because they are my 2 main time frames, okay? But when I look at the daily and the weekly, I just like to look at what kind of the obvious swings in price action are, okay? And for me, pretty simple at this point, right? Big push down, big pullback, big push down, okay? I don't personally view this as swing structure. If it helps you to be mechanical and it helps you to be strict, then yes, label it that way if it meets your rules, okay? You don't have to do it like me, but this is just the way I personally do it, right? Okay, so for me, just quickly draw on the last daily break of structure. Cool, there we are. So that was a low, right? And then we finally got that break there. So I can use my little fancy highlighter tool and we can put on the swing high and then the swing low here, right? Because we obviously pulled back a decent amount at that point. So we've had a daily change of character, which probably isn't going to appear actually, but essentially we took this high here, right? Make it dotted so you guys know. So when we came into that kind of that extreme weekly demand zone, right? A level we'd expect at least a weekly reaction from, doesn't have to pull back, but at least a decent reaction from. And then we see this big V shape that led to a bullish change of character. Right, that's the internal structure, straight movement down, all of these candles broke the prior candles low, then we pull back, and then all of these candles broke the prior candles low, and then we wicked that high, okay? So that's a bullish change of character, right? So that just gives an indication potentially we're gonna pull back. It took a few months before that finally kind of really started to commit to itself, but that's just how we use it, right? Now, another thing I actually do want to point out is when we got that bullish change of character there, at that point, this was the internal low then, right? Because this was the last pullback and then it took the high, and then we did get a bearish change of character again. I get this question a lot, okay? It's like, well, we had the bullish change of character, now we had the bearish one, so that should mean the daily pullback's over, right? And we're gonna keep on going bearish. Yes and no, not so much. So this is kind of another thing that takes a little bit of time and experience to get, but this is why I always say chocks, changes of character, right? Internal breaks of structure, they are the most aggressive form of structure break, okay? They happen almost everywhere and frequently because it's just the most aggressive form of structure, right? We're looking almost at, what some people call fractal structure, right? So the way we use changes of character and internal breaks of structure to our advantage, or the way we use them in useful information, is we just use it as one piece of confluence in a high value area. So what I mean by that is areas in which we expect price to potentially turn. So when we came into this extreme sort of weekly refined zone, and then we see a big strong reaction, we're just using that little change of character here, this little internal break of structure, just to give us that little bit more confirmation. Yeah, now we can actually see the internal structure switching bullish. That's a pretty decent sign. We're probably going to see a weekly pullback. Now, by the true definition, of the way we map structure, yes, this is a bearish change of character, and that is valid. But the point I'm making is that doesn't necessarily tell you that now that daily pullback has finished, right? And now we're going to continue going down. It's not as simple as that, okay? You have to know when to pay attention to change of character and when not to. And in a time like this, I would be aware of it. It is a bearish sign or confluence, right? But I'm not, that against everything else that has happened. We've come into a great level. We've had a big, strong reaction. We've had that bullish change of character. I'll just be more viewing that as coming into this level of demand. And I'm expecting price to at least come up towards kind of the EQ of this leg, okay? More up into the premium, especially when we're coming from that strong weekly level, okay? And this is kind of why I'm saying it's worth understanding, use the wrong tool there, where we are on the weekly. Is it a strong weekly zone? Because then you know how to interpret pieces of confluence on their own, that they might be less or more significant. So the point I'm trying to make here is, if you see a bearish shock here, how relevant is that compared to all of the bullish confluence we just looked at? Okay, I'm going to ignore that, really. I'm not that bothered. So, I'm just using that as an initial shine to show me, yeah, we're probably pulling back now, and then I'm expecting that pullback at least up above the EQ and potentially higher up into this weekly zone, okay? So we know where we are with structure. Now, we can put on our most relevant and nearest POI. So within a weekly POI, right, the nearest one that we're looking at, this is the strong one up here. But for price to get up there, right, up to that weekly strong zone that we're looking at, right, remember the one that broke structure, flipped, swept, etc., and has inducement. For the daily chart to get there, I would say there's a 99% probability it's going to switch bullish, right, because it's going to have to break this high. Now, you're probably wondering why I didn't say 100%. Well, of course, there's a possibility of what could happen is price could come up and it could literally intraday hit that zone and come all the way back down. And this would just be a spike, and the daily never closes above, okay? So there's obviously that possibility. But anyway, I don't want to try and overly confuse you right now. So what I'm talking about here, right, is if the daily is bearish, this is a daily strong high because it led to a break of structure. This currently is a daily weak low because it has not broken the high. So our almost blind expectation, excuse me, is that the bearish daily trend will continue, right, until it doesn't. Okay, so we don't really need to worry too much above what's above the daily high at the moment, massive amounts. But like you're probably going to see me talk about a lot in this lesson, is that although we have that blind expectation that the trend will continue until it doesn't, there can be times when you can still, make it a little bit more, not complex in your head, but the more advanced of a trader you want to be, and the more you kind of want to boost your strike rate and maximize your RR, you're going to have to kind of start thinking about trading like a chessboard and start thinking a few moves ahead. Now, you don't have to. You can keep your trading very, very, very simple, and I kind of recommend it when you are first starting out. Like I always say, right, your 3 time frames, don't have any more than that, and just blindly assume the trend will continue until it doesn't. But if you kind of want to hit that next level, right, that's when you do need to be thinking a few steps ahead. So what I mean by that is, me personally, I will be assuming that this bearish trend will stay intact on the daily chart, and we will continue from here, and we will form a lower high. But I'm always aware that in that 10-20% at the back of my mind, especially if we start to get there with a lot of momentum, etc., that where are we on the weekly chart? Well, we're coming off that strong weekly zone. This is a weak daily supply zone. It didn't achieve anything. It didn't flip or break structure. So there is a possibility, right, where we could come up to this zone or potentially higher, right? And that could mean that the daily may switch bullish. So why is that useful information? Well, what it means is, if you want to look for longs within here, yes, it is counter to the daily trend, but maybe you want to take them with a bit more conviction because it's counter daily, but we're coming off a decent weekly zone. There's plenty of risk to reward if we are going to go up to the next strong weekly zone, and it might be worth leaving a little bit of volume on, right, in case we do break out higher. Things like that, right? It's where you start to use those extra pieces of information. Anyway, try and keep this a little bit more succinct. So that's kind of a decent POI that I would be looking for price to come into, where then once this was mitigated, I would have a lot more conviction that potentially now we are ready to come out and take that low. But coming into the week ahead, right, thinking if this was Sunday the prior week, or what's happened, well, we've come up above the EQ. We were previously looking potentially the daily chart might form a lower high with this buy to sell candle. Now, again, this wasn't the greatest of zones. Yes, it's a valid supply zone, but is it a strong zone? Well, it hasn't broken any structure really in this leg, right? It's just a straight push down pretty much. We can go and investigate left, and there's a bit of weak structure here. This low here kind of broke that, so yeah, it's arguable. But the thing that made it a little bit better was it was actually a valid flip zone. Okay, so we had this demand zone here, right? This sell to buy, right? Pull back and led to the weekly breaker structure here. So we drag that across. What do we have? We have a reaction here. Okay, so price comes into it, it reacts and it pushes down. So that was a flip zone, but again, not the best. No real kind of breaker structure nearby. No inducement in the leg, it's a straight push down. It didn't sweep any liquidity. So it's not the most prominent zone in the world. It is a valid flip zone, it is a valid, buy to sell. But yeah, no real lower time frame confirmations within here, and we broke up, but then we've retraced. Okay, so it's not really relevant. But what you can see, right, is this fractal refinement here, right? These buy to sell wicks. Okay, and price has now mitigated this. So this will obviously be a lot clearer on, say, the 4-hour time frame, and you can see that price is coming off that level with, a pretty decent strong reaction, right? That evening star formation. Don't really pay too much attention to candlestick shapes, but nonetheless, we've had a straight movement up and a decent reaction so far. Okay, so if I can just quickly summarize up the daily, or the way I'll be thinking about it going into the week ahead, is we are clearly bearish. We have pulled back up to the premium. We have rejected a supply zone. Now, it's not the most prominent supply zone. The way I really view this is it's a 4-hour zone that is visible on the daily. So, I'm not viewing it the same way I would view this daily zone. If this price action was occurring from here, nested within that weekly zone, it's hit the daily refined, pivot candle that led directly to a swing breaker structure. I would view that as a lot more significant than it just tapping this zone here, okay? But with that said, we can assume potentially the daily lower high is in place, and now we can look for shorts to target this low. But because it's not coming off the most prominent of zones, and again, we're coming off that major weekly zone, right? You have to be aware in the back of your mind that potentially it could just be a short-term reaction to do what? To pull price back down to the nearest demand zone, okay? To then provide liquidity behind this high, to then just basically have that another move to the upside, to then complete sort of, its objective, come up to the premium levels, and then we could go off, or of course we could come up to that strong weekly zone. Okay, so they're kind of the pieces of the puzzle that I have in the back of my mind when I'm thinking about this, okay? So that's essentially how I shape up the daily chart. I'll be looking for shorts down to at least into this level, with the potential that we might obviously come down and take that low, or we can then look for longs from within here to then push price up to here. And of course we can use the 4-hour chart and the M15 chart to help us with that, to give us a sort of more intraday and intra-week bias, okay? So for the daily chart, really I'm just kind of outlining the two nearest solid POIs, potentially looking for shorts down into this level, right, with the potential it could keep going, or then look for longs. If the 4-hour and M15 start to switch bullish in here, then we can look to target higher. And then what would I do up here? I'd look for the M15 and the 4-hour to start to switch, and then I can look for shorts again, right? With the potential we could then come out and take the low, or maybe we're just coming back into demand and then we're going to come up higher, and then we can look for longs within here, right? If the 4-hour and M15 switch bullish, then we can look to target up there, and potentially the daily may switch bullish. Right, they're the pieces of the puzzle and the moves you kind of want to be thinking a little bit ahead, or just have your nearest demand zone, your nearest supply zone, and just play ping pong between the two and use the 4 and the M15 as your guide. If I can keep it a little bit more simple for you if you're finding this a bit overwhelming at the start. Okay, cool. So that's our daily and weekly analysis. Now the 4-hour chart is kind of really where you can start to make sure you're being very, very strict and use this as kind of your North Star if you have a similar trading style to me, okay, which the majority of you will do. So again, kind of just quickly forget everything you've been looking at, and just first thing you need to do is, where is the swing range we are playing within on a 4-hour chart? Where is my swing high? Where is my swing low? So I think it's pretty easy to say, right, that this is not going to be internal structure. We can clearly see that we broke. I'm going to get this to delete it, in fact. this is clearly going to be the higher high at some point. So we just need to find out, where is the swing low at this point. So we can see that this was the last break of structure here. Okay, so I'll quickly map it out with a paintbrush tool. So we had this movement down, we had this pullback here, and then we had this movement down here. In fact, let me just, that's right. So just double checking. So we had this movement down here, right? Then we came up, and then we finally closed below. And then this is actually, you can measure it. I won't do it now, but that's more than a 40 pip pullback. So that for me was swing structure because I used the 40 pip rule on $1. Then we took this and we switched bullish. Okay, then we had the pullback. Then we moved up. Then we finally closed below that low and we switched bearish again. Okay, and then we ranged for ages. And then we finally broke this high here again. All right, so we're playing them within this range. Price obviously never took out this low. And then we got another break of structure. Okay, so where is our swing low? Well, we know that that was the last boss. If you're ever confused, especially when price action can be a little bit messy, what you do is you take a box from the high, the swing high, you draw it across to where it was broken, right? And then you just drag it down, okay? And it's the lowest point in this box. So that gives us this, area down here, okay? That's the lowest point in this box, right? That wanted to break the swing high. So that's our swing low. So you know what, I'll make it even clearer for you guys. Sometimes you can do this. This can really help you in the live market as well. If you have templates like this and you literally just draw on a horizontal line, okay? So we had that 4-hour break of structure, okay? Price clearly moved to the upside. We had a little bit of a pullback. We pushed up. We pulled back into that demand. We pushed up. Now you see this 4-hour move, what happened? Well, it tried to form a higher high, right? It tried to take out the high. It failed to close above it. Okay, so as soon as that happens, you see that happen, price retrace. It's pretty likely this is a weak low and it's going to go, and that's when we led to that change of character. Okay, so we had an up move, a down move, an up move, all right, and then we just wicked to the high, which means that this becomes our internal low, and then we've taken that low there. Okay, so this then becomes our 4-hour change of character. Actually, it should be the inside bar there, right? That's the last candle to fail to break the prior candle's low. Okay, so that's our 4-hour chalk. So then at this point, right, that clearly, now we've had a 40 pip pullback. Okay, so that gives us we can put a pretty little circle on, and we know that this is clearly our 4-hour swing high at this point. Okay, and then again, if it helps you, you can put on that horizontal tool just to know what swing range you are playing within. Okay, so now no matter what price does between this high and this low, right, it can draw circles if it wanted to, it can do whatever it wants, but until price either closes below this low here or this high here, there's no change of swing structure. These swing highs and swing lows remain intact until price either closes below them, okay? Because I had a few questions about that. All right, it doesn't matter if price pulls up 40 pips here, right? It's irrelevant in terms of swing structure. It can do whatever it wants until either this low or this high, price closes outside of them, okay? Cool, so we know what swing range we're playing within. We've come up into this daily level in the premium supply. We can see it was a 4-hour level as well. It's not the nicest, right? It's quite corrective. It's not that clean. It's going to take this fractal refinement here, okay? And we can see the price rejected from it. And it's given us that pullback. Okay, so going into the week ahead, especially if you were just using the 4-hour chart as your highest time frame, right, and then you weren't looking at the daily chart or the weekly chart, you go, okay, I know what swing range I'm playing within. The 4-hour chart is bullish, therefore the pro trend move is going to be looking for a 4-hour higher low, because what do we expect? We expect the 4-hour bullish trend to continue until it doesn't. Okay, so we can look for shorts, right, to play the pullback, and then we can look for a 4-hour higher low, and then we can target this week high. This will be a week high if it doesn't take out this low. And we expect this low to hold. We expect it to be a strong low. Why? Well, because it took out a swing high, right? So we expect there's a vested interest in this low being protected, okay? That's completely valid. That's exactly the way I'll be thinking. But this is where, right, if you just kind of want to hit your trading to that next level, you kind of have to sometimes be aware of the bigger picture and thinking a few steps ahead and being aware of some of, the other pieces of the puzzle, like I keep saying, right? Whereby, yes, we can look for longs from within here, and I will be looking for longs from within here, and I will be potentially anticipating that for our high low to then target that higher high. But what are we also aware of? Well, the daily chart has pulled back into a daily supply zone that we can see. Yes, it's not the best, but it's a daily supply zone in premium, right? This is a weak daily low. So, if the daily's pulling back and the daily's bearish, the 4-hour had to do what? The 4-hour had to switch bullish to facilitate the daily pullback. But if the daily has completed its objective, and the daily's objective was to pull back to supply and premium, right? If you think about it that way, if you think like each time frame has its own mission, that can kind of help, right? And you can think, okay, has the daily's objective, has it completed its mission? Potentially, because of course it could still come up higher to the premium supply, right? But if it's come to, the extreme supply, right, really at the top, but this zone is still in the premium, right? So there's a good chance that potentially the daily pullback is over. So if that's the case, maybe now the 4-hour chart might be ready to switch bearish and we might be coming for that low. Of course, we never know. And, we just have to stack those probabilities in our favor. But that's kind of the point I want to make. Yes, the 4-hour chart's bullish and yes, we could form a high low here and continue on, but you have to be aware in the back of your mind that it might not, because the daily chart potentially has now done its job and now we're ready to go. So what that means is be aware of both of those and be open to taking both short trades and long trades, but managing your expectations of potentially how far to push them or kind of, how high probability it is. Because it's very different from trading counter 4-hour trend short up here, where, we have this massive range. This is a really big 4-hour range, which means if you're shorting up here, there's plenty of risk to reward to take a short down towards the demands and the discount, right? That's if I measure this roughly, say you get short somewhere around here, even to just this level, it's over 100 pips, okay? Not even near to the extremes. 2 pip stop, 50R, right? So when you have a big expansive range, that's one tick in the box for it being higher probability to trade against the 4-hour chart, okay? It's not the same when we're trading in a very, very tight 4-hour range. And obviously there's not as much risk to reward to work with if you're trading against it, okay? So that's one. Two, if you think about, you're actually trading on side with the daily and it's likely the daily's formed a lower high. So that's another tick in the box for trading counter trend, right? All of these things you need to be thinking about, okay? Anyway, I don't want to kind of rant on about this too much, but essentially that's the 4-hour range we're playing within. We know we've come off a decent level, but how have we come off it? We've come off it with that strong V-shape, big, impulsive, strong candles. So that's a pretty good sign if you want to continue to look for shorts. Cool. So now what I'm going to do is I'm going to draw on our, POIs. So first thing we have is this, sell to buy 4-hour wicks here, okay? So what is this? This is a fractal demand zone. It's where you're reading the pullback on a lower time frame, right? Because prices come up, it's pulled back. It'd be much clearer on, say, the 15-minute, and then it's gone up. So essentially reading that 15-minute sell to buy range with the 4-hour sell to buy wicks, okay? So it's not the most significant of 4-hour zones. You have to understand these fractal refinements are aggressive for this time frame, because essentially what it is, it's a lower time frame zone that you can see on the 4-hour chart. Okay, so this type of POI here isn't going to be, in my opinion, and from my testing and my experience, it's never going to be as significant as a POI like this, where you have a clear sell candle before the bullish candle, okay? So I will still happily view this as a 4-hour zone, and I'll still happily look for longs from here and use it as trading ideas. But it's not as strong in my mind, right, as these ones down here, okay? Also, did this lead to a direct breaker structure? Not really. It's kind of one push up in the leg. Arguably it took out this high here. It's broken some structure, but it's not the cleanest compared to like this, right? It directly led to a swing breaker structure, okay? So that's a bit better. And then the next POI we have, right? Again, another sell to buy. This is another good level. Again, led to a breaker swing structure, okay? Other things that both of these zones did for me is they both swept liquidity, okay? This one here, it took the liquidity behind this low, right? That's structural liquidity because you have an internal up move, a down move, an up move, right? Because this inside bar takes the high. So then you have liquidity behind this low. Price comes down and it uses that liquidity, sweeps it, and then we go. Okay, so that for me is a sweep zone. Again, very similar thing here, right? You can see price took the liquidity behind that low there. Cool. So we have an up move, we have a down move, we have an up move. Okay, it took the high, so there's liquidity behind that structural low. Price takes that liquidity, sweeps it, and then boom, big move there. Okay, so, and we have one more actually, forgot to mention, is we have this here. Okay, so we have this big sell to buy. Now it's not the cleanest of zones because obviously if you draw it from the sell to candle, it didn't get engulfed straight away. It's kind of more of a range, it's a little bit messy. Also, when it was created that level, right, I can get the paintbrush to work for me. Price went up, it came back in, filled some of the orders, right? So it's kind of mitigated and then went away. It's not really that clear. So I'm aware it's there, but I would rather refine this to the wick and I would use that as a fractal refinement, okay? So really we've got 1, 2, 3, 4 reasonably clear POIs to look for, to either trade short into and then look for the longs to catch that 4-hour higher low, right? To then go on and form a higher high. We're aware that price is currently pausing in this sell to buy wick, so we can look for longs from here, but we understand that, well, another thing I forgot to mention, right, is the premium and discount. So quickly whack that on from the swing low to the swing high. Okay, this one's in the premium, quite clearly in the premium. It's above the prior range, right? It's above the boss which occurred. This is never going to be ideal. Generally, these zones, not always, but generally, these just provide reactions, okay, for then price to come lower, to build liquidity for a deeper move. Okay, so you can look for longs from within here, and yes, it is pro 4 hour trend, but you have to understand, you can't just have in your trade plan, right? Any pro 4 hour trend trade I take, I'm going to just get in long, and I'm always going to target the week high. It's not necessarily a bad thing. Over a large sample size of trades, that will do well for you. But you have to understand, if you want to be the trader who wants to boost your strike rate and boost your average risk to reward, right, that you bank, this POI is nowhere near the same as taking that same approach as down here of getting long and trying to target the high. Hopefully you can understand why. Just sometimes it can be quite easy to get caught in that when you're looking to get into a trade, right? And you look at your checklist and you go, well, it's pro 4 hour trend, it's a 4 hour POI. Now I should target the week structure. Well, no, you have to you have to understand all of the variables here, right? So if we're coming to the start of the week, we can look for longs, but I would just be expecting this to push price up a little bit or up to the next nearest 4 hour supply zone, right? To then come lower, because all of these 3 zones are what? They're below the EQ. They're in the 4 hour discount. They're also nested within, or at least a little bit of this zone is nested within this daily zone, okay? It's not the strongest of daily zones. All it did was break daily internal structure, but it still added confidence, okay? It's within a daily sell to buy. Both of these swept liquidity, okay? And obviously this being the extreme, okay? Really, if price comes down to this zone, it's kind of the last zone that has to hold, because if we, let's get this to work. Cool. If we draw on this, right, this is pretty much all being mitigated. If you follow the order flow, right, you know, could be some orders left in here, but I think if this zone goes, it's unlikely the 4 hours are going to stay bullish at this point. It's pretty likely we're probably going to come out and take the low, okay? So these 3 zones kind of are, you know, the main ones I've been concentrating on to look for longs. Now, main downside about this one is obviously there's a decent couple of unmitigated zones below it. Also, it doesn't have any inducement in the leg, because you see this, all of these candles break the candles high. There's no structure. What you want is that structural liquidity in front of the POI to induce sellers into this demand. Okay, so this doesn't have it. So the fact it sweeps liquidity is good. It improves the probability of the zone, but it's not great that there's no inducement. So what it can mean is you can get a reaction, right? And then it gets used as inducement, right, for the one below, okay? Because this zone here acts as inducement, right? This pullback here acts as inducement for this zone. So this zone is a sweep, it's obviously lower down, and it has inducement, so straight away that makes a higher probability. And also you can see there's kind of equal lows there as well. Now I get that question a lot, you know, do equal lows behind a demand zone or equal highs behind a supply zone put you off? It's not ideal, it's not great. I'd prefer if they weren't there if I'm looking to trade from it. But generally I try to kind of more react to liquidity than predict it. Okay, cool, fancy phrase. What does that actually mean? Well, what it means is if I'm aware there's kind of little, you know, intraday lows, double lows, equal lows, I should say, behind it, you know, I will still happily look for longs from within here if I get my entry models and et cetera, and I like it. But yeah, I'm aware price could sweep it, and if it does, fine, it sweeps it, comes into this zone, and then I get my entry model in here, fine, I understand what happened, but you just have to accept that risk whether you want to take it or not, because there's been plenty of times where I've seen super big equal lows right behind a level, and I thought, no, that's going to get swept, I'm not going to take it, and then I've missed an amazing move, okay? That's just my personal approach. Anyway, I'm going to try to speed this up a little bit, because this video is going to be 4 hours long, because we haven't even got into the week, the week's recap just yet, but hopefully you're enjoying it. If not, if you find yourself losing concentration, as always with these videos, pause it, go have a cup of coffee, you know, do 20 press ups, do whatever you need to do, and come back later or come back another day and make sure you are absorbing it all. Cool. So that's kind of the way kind of I would be summing up those POIs in my head coming into the week. So that's the demand zones. Let's look at the supply zones. Just gonna quickly take off my sweatshirt. Cool. So supply zones, where are the possible POIs that we could potentially look for shorts from, right? Because remember, we're in a massive 4 hour range, so there can be plenty of risk to reward to take shorts. Well, we have these buy to sell wicks, again, not the greatest of zones, didn't even really lead to a break of structure because this low was already broken. Obviously no inducement, no sweep, etc. But you know, if we get those lower time frame confirmations and it looks clear, then yes, why couldn't price push up into here and continue? Now the zone I much prefer, right, is this zone here. Okay, because this one, you know, swept the liquidity behind that high, it mitigated the daily and 4 hour zone, and it led directly to the chock, right? And it's the extreme. So we are going to get a bit of a pullback from here, and we're going to sell, right? I prefer really to sell from this one than this one, but I'm happy to sell from both, right? If I get my lower time frame confirmations, etc., because the risk to reward is decent. Now, yes, some of you may be thinking, well, why are you selling counter 4 hour trend from a weak high, right? Remember, it's a weak high because it's failed to take out the low. And this is where, like I said, if you just have those blanket rules in your plan of I don't want to trade counter 4 hour trend from a week, I don't want to sell counter 4-hour trend from a weak high. It's a good rule to have, but there are times when it's not as low a probability, right? And this is a time because, like I said, we've come into the daily premium. There's a possibility the daily lower high has formed. So now we've got decent risk to reward to come all the way down and take out this daily low. So that's where you have to weigh up personally for your style and your risk tolerance. Is that worth taking the short for? That's one tick in the box for me. Another thing, and when I will do this and when I won't do this, is, okay, think of objectives again. This is another way of thinking about it. What is the mission and objective for the 4-hour chart? Well, the way I would see it is at the moment, it's likely going to want to pull back into the discount prices where there's most likely going to be strong areas of demand to fill those orders up, to then form the high low, and then its mission will be then to go on and form the higher high and take out the weak high. But if price comes up to either of these levels, before it's done that, then there's still a decent chance that it's just coming up to pick up some more supply, right? To pick up more liquidity, to get that down move and come down here. So that's when I'm a bit more inclined to take those riskier 4-hour trades, right? That counter trend and from, essentially weak highs. But if price had come down here, right, mitigating one of these strong POIs in the discount and demand, and then comes flying up to one of these zones, can you see hopefully how that's much lower probability now to be looking for sells from here, right? Yes, you can still do that, but if you do it, you want to be looking for a lot of confluence for those entries, right, on the M15 and the M1, etc., and you want to just be looking for quick little reactions from them, quick little pullbacks. It's very unlikely if prices come down here, it's had its pullback, it's filled up all this demand, it's way less likely that when it comes up here at this point, that it's then going to go on and do that. Whereas if at the start of the week or before it gets down here, it just comes back up, hopefully you can see why this is a lot higher probability than the scenario just looked at to then look for those shorts. It's still counter trend, it's still not ideal, but yeah, that's kind of the times in which I'm a bit more happy to trade from weak structure. But then the other two big parts of that I'm really trying to drill in your head is when we have a big expansive range like this, right? There's so many pips here to the downside that the risk to reward is very, very decent compared to, when you're trading within tight ranges over here. And also the daily, etc., etc. Okay, cool. I think that's kind of all the key points I really wanted to make about that. Hopefully you are still awake. So that pretty much wraps up the 4-hour chart. Looking for potentially longs from here, right, from a high low, but I would not be expecting to take out the high from here. I'd just be looking for longs really into the next level of supply. Of course, you can leave a little bit of volume on because we can go from here, right? It doesn't have to put into the discount. But once we get into these levels, if we get longs, then I'll be a bit more inclined, right, to be a bit more conservative with my long-term management. Cool. So let's take a look at the 15-minute chart. Okay. Again, what do? Kind of almost temporarily just forget everything we've been looking at and we try and find out where is our swing high and our swing low. So 15-minute, we've clearly had this big push to the downside. So I think it's pretty safe to assume, right, that we are bearish. So have we had a more than, just make sure I'm doing it accurately, more than 15 pip pullback? Yes, we clearly have. So I can use my pretty little M15 circle to tell me that that is the swing low. Now I want to find where was the last M15 breaker structure. So we had this pullback here, then we had this movement up. Then we had this pullback. We failed to close up above until here. Okay, so let me draw on the lines and make sure I get this accurately. So that was a swing high, right? Because we had more than a 15 pullback. So now if I drag it across, that's where the M15 breaker structure was. So we use our box tool, right? It's always useful if you ever find it a bit confusing where the swing low is. Draw it from the high that was broken, right? All the way across to where it was broken there, and then drag it down. Lowest point in that box is a swing low, okay? So you can see this here was a swing low, and therefore this was our bearish boss, okay? So you can see the dotted line was that 4-hour inside bar. That's where the 4-hour bearish chock was, but the actual M15 boss was here, okay? So they don't always align. That's why it's just a general guideline or observation that sometimes the 4-hour chock lines up with an M15 boss, but it's not a rule and nothing that you should be using to identify where the bosses and chocks are of different time frames, right? When you're looking at a boss or a chock, just concentrate on one time frame. It's irrelevant what another time frame is doing, okay? Hopefully that makes sense. I know a few people were getting a little bit confused with that, okay? So when this low was broken here, where was the highest point that broke it? After this low was printed, you do the opposite, right? You can draw the box from the low, to where it was broken, and then drag the tool up. Okay, so you see how it's after the low was printed. It's not this high, it's this high here, right? That's the highest point, cool. So after that point, we had this break. Then we have a 15 pip pullback, not quite. So this is where it's a little bit messy. Measure here. Yes, so that's over 15 pips. So it's quite easy to miss this. And it doesn't massively matter if you didn't see this as swing structure, really, because it's not the clearness. But if you want to be super mechanical, you do need to be aware of it, okay? So just zoom in so you can see that. It's a little bit tricky. But essentially, price comes down, right? Next candle fails to break the prior candle's low, so we're having that internal pullback. But you see, if you measure it from the low to how high it went, 16.8 pips. So that means it was a swing pullback. And then when we finally get the close, right, that's where the low is, where the boss is, I should say. So where's the swing high now? Left to right, drag it up, okay? Obviously it's after this low is printed, so you don't include this candle, it'll be this inside bar. All right, so that would be your next swing high. And then we can measure this, 15 pips, nope. Okay, cool, and then right, that's when we get the more than 15 pip pullbacks, that's where we can put our circle on, okay? So where's our swing high and our swing low? Here we go. So we've got a little save template there, so you can draw this on. Again, this can really help you in the live market, whether you're new or experienced, because it can be very easy sometimes to get stuck into the M1 and you kind of forget what range you're playing within on the medium and higher time frame. So this is the swing range we're playing within on the M15. So we know we're bearish, but the 4-hour chart is bullish, okay? So they're not aligned, they're conflicting, so it's not the most ideal. But we have nice, big, expansive ranges to work with, right? This is always, in my opinion, it's better when you have bigger ranges because it means that you can get short from here. And even if, the trend isn't going to continue and we switch bullish because the 4-hour chart's bullish, remember, fine. The risk to reward is still decent because you're usually, if it comes into, one of these decent supply zones in premium, usually it's going to give you enough of a reaction to get to break even, then remove your risk, whether that's through partials or trading. So that's why when you have a bigger range, it's way more ideal when your strike rate's higher. When you get stuck in very tight and corrected ranges, it can be a bit more difficult, okay? And the other thing to that is, remember, we're in a massive 4-hour range. Like if we zoom out on the M15, right? That's our 4-hour low all the way down here. So although we're trading counter 4-hour, can you see now this is the point I'm really trying to drive home? You might have it in your plan that, trading against a 4-hour trend, I don't want to do it or it's risky. But when it's times like this is where you can do it. If price comes into the premium of the M15 range and we're in really high up in the premium of the 4-hour chart, right? That's going to be a decent move to trade and target pretty low with really, really high risk to reward, even though it's counter to the 4-hour trend. Cool, I think you guys get my point. So we have this 4-hour POI. Remember this was the buy to sell wedge, just give you a quick refresher. So we're coming into this demand zone. We're really just expecting a bit of a reaction, but there is a possibility we could form a higher high. But really we're looking probably from longs from here, up into the nearest supply zone, potentially the extreme, and then we could look for shorts if the M15 stays bearish, right, to target down and towards the 4-hour discount. So go back to the M15. Cool. So where are our POIs? Well, let's see what we're reacting from, because that's a pretty decent reaction. We know we're in this 4-hour POI where we have an M15 zone, right? You can take the whole inside bar that's then engulfed by the bullish candle, okay? Or what you can do, especially when you see price has gone that low, obviously with the benefit of hindsight, this is what I do all the time. I just clean up my charts a little bit, be a bit more refined, and you can draw it to the wick, okay? Cool. Came into there, we then had a bullish change of character because the inside bar failed to break the prior candle's low, which means we have an internal pullback. Then we come down and then we take the high. All right, so this is our M15 bullish change of character. Cool. All that tells us is we've come into M15 and 4-hour demand. We've had a bullish change of character. Now we can expect a bit of an M15 pullback, okay? Now, if we get changes of character within this level here, yes, that could tell us that potentially the pullback's over and we're going to continue, but you kind of have to expect that in the middle, especially when it's counter trend, that price is going to be corrective. It's going to move. It's going to give you a bearish chock. That might give you a bullish chock. It might give you a bearish chock. Why? Oh, it's counter trend. It's pulling back. It's in the middle. And this is where its lowest probability trades are in the middle. If you're going to trade counter trend, you want to be doing it around these levels here, right? Where you're getting in near the bottom, you're getting in the discount, and you've got risk to reward to push it up towards the EQ or higher, okay? And if you want to short, obviously you ideally want to be doing it in the premium. So let's draw on our two POIs that I can see. So nearest one, right, whether you take the whole range or you refine it to the candle, right? Got this level here. And then we have one unrefined, sorry, not unrefined, but unmitigated was the word I was looking for, zone here, okay? So both of these led to a break of structure, right? This inside bar here took this low, and this supply zone took this low here. Now, yes, technically this is a bearish candle that's then engulfed by a bearish candle. So if you are super, super strict, right, this wouldn't be valid. But if you want to draw it to a single candle, what you can do is go through the time frame. So let's say look at the 16-minute. Okay, boom, there's your bullish candle, right? It's engulfed. It gives you a little bit of a bigger zone, or maybe you want to go down a bit to be a bit more refined. And then the 14-minute is also a bullish candle engulfed by a bearish candle. So if you're super, super strict, that's how you should do it. For me personally, I'm not really that bothered. Like, you know, I have a pretty good read on supply demand, and I'm happy to do it this way, okay? Cool, so these are kind of the two zones. They're both nested within our 4-hour zone. Although what you can do, right, to be more accurate is if you want to trade that counter 4-hour trend move only from when the 4-hour POI is mitigated, then you can refine your M15 POI like that, because that's where the distill of the 4-hour chart is. Okay, so they both led to breaks of structure. They're both strong zones. They're both pro trend. Now this one doesn't have any inducement in the leg, right? It's a straight push, and this one can act as inducement for the one above. Also, it didn't sweep any liquidity because that's a straight movement down. Then it pulls back and then it comes down. Now, some people would kind of classify this as a sweep because it sweeps the high of this candle here. For me, what that means is it's a lower time frame sweep. So say on the M1, that would be a sweep because prices come down, it's come up, it's come down, and then it would have swept it, and then it would have done that. But for me, I don't classify that as an M15 sweep, okay? Some people do, I personally don't, right? Cool. Now, they're the two POIs, they're both decent, more than happy to look for shorts from both of them. The only thing I'd be a bit cautious of with this one is the the inside bar has not been touched, right? It's not mitigated, it's still fresh. But what I'd be aware of is the range has been, right? You see how that you have the buy to sell range here? It creates supply, boom. But then what happens, price comes into that range, fills up the orders, and then continues, right? Whereas this range here, this buy to sell range, right, is unmitigated. So if you're following the order flow, it's a lot more likely that this is going to hold, okay? But, that doesn't always have to happen. If you have an unrefined pivot candle, I would still be more than willing to look for shorts from within here, okay? So they're the two POIs. So let's play price forward a little bit. Now, like I was saying, if you're going to play those counter trend longs, really you want to be doing it kind of near towards here and not so much in the middle when price is already at the EQ. So let's see what that is. Excuse me. Okay, so that lines up nicely right up into the premium. So let's just play this forward to around London. Kind of get it to just line my mouse up around sort of Frankfurt open around 7 a.m. GMT. Okay, so this is what I was saying, right? If you want to play those counter trend moves, all right, we've had a shock, we've had a V-shaped reaction, and then you could play it from the extreme. Yes, you are buying from a weak low. It's counter M15 trend, but it's pro 4-hour trend in a 4-hour zone, right? This grey box here, and it hit the refine zone. It's had a decent move away, right? Technically that is a sweep of liquidity as well because that was a pullback, right? Swept the low and then went away. So if you're trading Asia, you could look for longs from within here. But remember, the other key point about trading counter trends that I explained earlier is it's better to just trade from a weak low here than say if this move here had a pull back into premium and mitigated one of these supply zones and then come down to the weak low, way lower probability to be buying at this point. Why? Well, think about objectives again. What was the M15 sort of mission or objective at that point? Well, it's bearish, so its mission, or the reason why it switched bullish here from demand, its reaction to demand was to facilitate the pullback back up to supply, to pick up those orders, to pick up the liquidity. So once it's done that and it's coming down, the odds of this low holding are slim. Yes, it can happen, and it could react and then come up higher and then go, but it's a lot lower probability. So if you're going to trade from a weak structure, you want to do it right before it's kind of gone anywhere, before it's come up here. All right, and it's a bit more high probability to be taken at, but still risky, of course, right? So kind of coming into Frankfurt, London now. All right, now this is what I was saying, okay? If you get, because what we've had essentially is up, a down move, and then an up move, and then a down move. So we've had a bearish chock here, but if you look left, we haven't mitigated anything. We haven't even come up to the EQ, and we're in the middle of the range, right? So this is much lower probability if you start looking for shorts within here. It's valid, and they can play out, but just understand why it's much lower probability. And the best trades are just waiting for those clear supply zones up here to be mitigated, to wait for the pullback to ideally reach into, okay? So you can trade these and they can play out, but just understand it's aggressive. And if you're going to do it, always be aggressive. Be consistent with your approach so that your edge plays out over time. If you pick and choose when you're going to kind of be aggressive inconsistently, then you're going to be at the mercy of random distribution, right? Sometimes you'll back the winners and sometimes you won't. Okay, so we're pushing up. We come into our level of supply. So now what we can do is jump down to our lower timeframes, right? So we come into our supply zone. Now, another thing you can do, I don't talk about this a lot, but it's something I've started doing a bit more recently and I used to do it a lot, is if I have a zone, I mean, I've refined it to the wick, but if you had this kind of large M15 zone and you want to be a bit more accurate, right, is you can go in and find the refined zones within it, right? You can go and find that M1 zone, right? This one clearly makes sense, right? It's actually a flip zone because we have this M1 demand in here. I can get it to draw, right? Price came into demand, it reacted, it fell to put in a higher high, and then prices come down, okay? So that's a pretty decent zone. It also swept the liquidity behind the high, just about, right? And mitigated this wick, etc., etc. Following the order flow as well, right? That mitigated that, okay? It's a little bit you don't need to do this, it's unnecessary, but if you want that kind of extra confirmation and accuracy and refinement, so that when price comes into here, right, I'll show you, drag it across, and you start to kind of get that M1 chalk, and maybe it's not the most convincing of chalks, or you don't get a beautiful sweep or V-shaped reaction, because I get that question a lot, right? Sometimes you'll see me enter trades that don't necessarily have the most clearest M1 liquidation and the biggest V-shape, but if I do it, it's when it's in an extreme M15 zone, it's hit usually a refined M1 level, and I have a lot of confidence that we're ready to go now, okay? And that's when I'll be a bit more aggressive. So this can really help give you a little bit more confidence if you want. Okay, so at this point, what's going on? Well, we come into our zone, clearly bullish with a lot of momentum. We had a pretty nice liquidation here, but it's quite far away from the zone, but it's better than not having it. So at this point, what would I be waiting for? I'd be waiting for a change of character on the M1, but we've actually now just gone on and taken this high. So now actually I would move our chalk line to the nearest point, which actually, I think this is just about an inside bar. Just looking at the stats on the top left. So the high of that is 4330, and so is that, which means, yeah, that's an inside bar. So that would actually be the nearest internal low I need to see go. We have actually reacted from M1 demand, right? If you take, yes, we didn't hit that, but you see how it's the range, so the sell before the buy. Okay, so we've come back in, mitigated that, and gone higher. Okay, so let's, at minimum, the first thing I need is a bearish chalk before I'm even going to consider an entry. Okay, so now we've got the bearish chalk. Okay, now this here, it's going to depend on what you do. For me, it's not ideal, but I still view this as a flip. Okay, so let me explain. Price has come into demand and it's reacted, and it has broken high, right? It's wicked it, but price has failed to close above it. Okay, so I don't have tons of data on this. I wish I had a bit more, and this is something I'm going to be keeping a keen eye on going forward. But what I have noticed, especially if it comes into an area, right, where I'm happy to get short from, I really like this area, it's pro trend, etc., 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 right? We've just broken it down loads. I'm happy to be a little bit more lenient with my confidence and a bit more aggressive. Okay, so price has come into demand, it's reacted. Now it has, made an internal high because it's wicked it, but it failed to close above it. So in my head, I'm still viewing this as kind of partially it's failed to do its job. Demand has failed to cause price to actually close above the high, and price has come back down. Okay, so this is the reaction, right? If price closes below the reaction now, I can classify that as demand failing to do its job. Okay, so now that's happened. So it would be more ideal if price didn't even take the high out at all. That would be a lot more high probability, right, to look for that demand to supply flip. But for me, if I really like the level, I'm willing to be a little bit more lenient. Okay, so if I could give you a very strict rule for the one that I'm following at the moment, is that for demand to have done its job, I want to see price close above the high. So if it doesn't, and then price closes below the reaction, which it actually hasn't done yet, arguably hasn't really now. How's it now? Yeah, now it has. Okay, cool. So now that for me, let's draw on to really show you. Don't know if I have a template for this. Yeah, I do. Fail reaction. All right. Now we've closed below it. So what does that mean? Well, it means we've come into our refined supply. We have swept the liquidity behind this high. Okay. We have had our bearish chalk, right, with this line, because price pulled back. It came up, and essentially that inside bar means it's an internal pullback, and then we've taken the high, and then we've taken the low. Okay, but even if you kind of missed this or whatever, you can see we've clearly had a shift in structure here, right? Even if you kind of didn't quite see that. Okay, how we had the flip? Well, for me, the way I view it, we reacted to demand, we failed to close above. It's not ideal that it spiked above the high, right? But it's enough for me if I like the setup overall to now say that this reaction, this buy before the sell, is the supply that overpowered this demand zone. Okay, so what does that mean? Well, it means anywhere from within this here, this buy before the sell in this box here, is the supply that caused the flip. Now, I wouldn't really be that keen to just maybe necessarily jump in straight away because it's looking pretty messy at this point, right? I've had a bit wick, it's kind of a bit all over the place. So I'd be a little bit hesitant at this point. I wouldn't be totally convinced. Okay, boom. This is what I mean by V-shaped reaction, right? Clear momentum, clear sell-off. That's what you want to see, right? Clearly, there's an overwhelming imbalance between supply and demand at this point, right? So at this point, what am I thinking? Well, this for me becomes an extremely high probability POI to look for shorts. Now, you can take from the base of the reaction to the high. That's called as well. And then if you're like me, you would use a fixed 2-pip stop loss, and you would just put your stop behind the high, right, above the high of the reaction, and then you can enter in, like that, depending on how much buffer you want to give. Or you can be a little bit more refined, right, and you can just draw it from the candle like that and clean it a bit up, right, and that gives you a little bit more stop protection, but you might not get tagged in. Okay, there's just a risk you want to take. It's also a sweep zone, and it has inducement, right? This gives you inducement here. Now, if you were thinking, is this a flip zone, right? We did have a decent reaction. Well, look left. What did it react from? nothing really that obvious in my opinion. Yes, there is sell to buy wicks here, but that for me is really not that clean. Now, if we had reacted from this, at least this sell to buy here, which it didn't, right? It missed. Then, yeah, it would be a flip zone, but for me it isn't. But even if it did, it's just horrible. It doesn't look right. Like, it just looks very, very messy. It didn't sweep liquidity. There's no inducement. So this to me looks like perfect inducement for the extreme, okay? If you're ever in doubt about the flip, the extreme is always going to be a frame, right? It's always going to be highest probability, because if we're wrong and price comes back up and you take a loss, well, fine, price was coming up higher anyway. Whereas if you take a loss here, well, then maybe you're thinking, well, I might come off the extreme now. So then you get in again, and then you could be wrong anyway, and then you've taken 2 hits. So, excuse me, just gonna take a sip of water. So yeah, anyway, let's try and go a little bit quicker. So that would be a decent zone, right? And this is where I'll be looking to set that entry run and look for price to come back and hopefully tag me in. All right, if I just quickly look at the 15-minute. All right. We're pro M15 trend. We've come into a 4-hour zone with a refined M15 zone within that, and then we had a refined M1 zone within that. It's in the premium. It led to a break of structure. Obviously, a lot of momentum came into the market from there, and we have plenty of risk to reward to push price down into the 4-hour discount if it's going to continue. But it is counter 4-hour trend, and we are coming off a 4-hour demand zone, right? So that is that risk, and also price could come up into this unrefined extreme. Okay, so that's another thing I would be cautious of. But that's fine, because I'm willing to take a loss in these areas. In an area that's as high probability as this, if I take a loss, I'm not going to be pissed off. If I took a loss down here, I'd be a little bit more pissed off, right? Because I know it's not really high probability. Up here, yeah, these are the places I'm not going to kick myself if I take a loss in. Okay, and if it pushes up higher, it gives me another entry model, fine. I'm willing to accept the risk and accept the losses there. Now, what you can do if you want a bit more confidence is you could wait for the M15 internal structure to shift bearish first if you wanted more confidence, right? So what does that mean? Well, it means you'd be waiting for a bearish chock. Price comes up, right? Pulls back and it comes up. So you'd be waiting for that chock, and then you look for the M15 confirmation entry. Okay, that gives you more confidence, but of course you run the risk that you might not get an entry, right? It doesn't have to pull back for you to do that. Okay, cool. So that's the entry that I'd be looking for. Let's just zoom in a little bit. So let's play this forward and see if we get tagged in. Okay, so it just rejects the distal. Lovely, lovely entry. So not going to do anything risk, right? No, have your partial set, 25% at 4R to cover your stop loss and commissions. Now, what has happened? We've got a nice V-shaped reaction for our extreme supply level, and we have got another bearish M1 chock, right? Because obviously price had to chock back to the upside, right? We came down, pulled back, had a bullish chock, came up, and then we've had a bearish chock, okay? So let's say for whatever reason you didn't like this level and you weren't a bit sure. Well, now you have your first level of respect because demand has now failed. Okay, boom, supply might be in control, but maybe you want to see supply hold first to really give you that confirmation. Well, now supply is held and the M1 internal structure switched bearish again. So now what do you have? Well, now you have your double confirmation entry, I guess you could call it, or a confirmation of this level. You don't need to get too caught up with the names, but essentially you're just trading the confirmation from that level, right? So now you have either your first entry, or if you're really aggressive, right, you could take a risk entry from here, right? Not a risk entry, a scale-in was the word I was looking for there, right? If you were that risky. Now, for me personally, my risk tolerance isn't that high. I don't personally look for another entry until I've removed the risk from my initial trade. So I personally wouldn't take this trade here, but you obviously can do if you weren't already within. So let's just leave the initial one on, okay? So if you have 2 pip stop, let's just see, would you have been tagged in? Doesn't look like it. No, okay, because the stop has to be above the high, so I'd be leaving it like that. That's fine. There was a bit of a touch into the distal here, but they definitely still can be orders within there. It swept the liquidity behind this high. This can act as inducement, right? We had a down move, an up move, and a down move, so we have structural liquidity. So that's still a decent move there to look to get in long. So short, right? Following that bearish order flow. Okay, now you'd be tagged in, right? So on. And so forth, and keep going, boom. I'm going to delete this just to keep it clear, but I just want to show you there was an extra entry down there. So really what I'd be looking for at this stage is, ideally you want to see at least this low go, right? Because you can see kind of the bigger swings in price, because this could just be a pullback into here, right? And that could continue higher up to that higher POI. But keep your management nice and strict, whether you use a way for trading to break even or your partials, right? And then you don't need to worry about it. You just let your risk be removed, right? So now your risk would be removed from this trade, right? So let's play this forward a little bit and speed this up, okay? So now what's happened, if we jump back up to the 15-minute, right, you want to be looking ideally at obviously 2 time frames at once, is look at that beautiful V-shaped reaction from supply and the premium. But more importantly, we've had a bearish M15 chock. Okay, so if you were waiting for even more confirmation, now you can look to trade the M15 confirmation entry. But the other point is as well, is if you're in a short, you've removed your risk. Okay, cool. Well, what are you going to do with your remaining volume? Well, some of you may use a fixed R method. Okay, so that might just mean it's not based on technicals. So it's just purely you're playing the numbers game, which is what I recommend probably almost everyone should do, or it should at least start off doing, because it removes a lot of emotions from the market and it just keeps things simple and consistent, and you're just trying to become the casino, right? Just let the edge play out over a large sample size of trades. So that would be, you've removed your risk at 4R, you leave your remaining volume on, and you bank it all at 6R, 8R, 10R, whatever. I wouldn't really go any more than 10R when you're trying to find consistency. 10R is the max, and just keep it nice and simple like that. If you use technical targets, well, now, because we've had a bearish change of character, we've pulled up to premium supply. What does that mean? Well, it's probably likely now that this pullback has finished. The M15 has completed its objective. Yes, there's a possibility we could come up higher, but I think it's a pretty decent chance now that we're going to take out that weak swing low. Okay, so you can target a decent chunk of your volume here. Now, if you're a bit more of a swing trader, or you really like those larger long-term moves, you also have that 4-hour confidence. Remember that we are within 4-hour premium, like really high premium, right? Massive 4-hour range. Okay, and we can potentially pull down deeper, right? And you can hold on, I'll leave it up to you depending on how much you want to trade, hold into your management. As you guys know, I'm always transparent about this. I am not that type of trader. I do not hold onto my volume for that long. It's not congruent with my personality or my style. I find it a lot more successful long term just to kind of around that 10-hour mark, majority of my volume is banked, and in rare circumstances when all time frames are aligned, I will try and hold on for a lot more volume for a lot longer. Okay, cool. So we've had our M15 change of character. What we've also had right now is a M15 flip zone that you can work with. Right, price comes into this demand level, it pushes up, it reacts, and it pushes down. All right, so now we have, whether you take the inside bar range or the whole reaction, right, that essentially is your M15 flip zone, right? So you can trade this, right? If you trade the M15, obviously entering on distal, risk reward is not great. So if you were just targeting this low, anything less than 5 to 1 is not really worth it in my opinion. When you know how to trade this way, other strategies would kill for 3.8. With this, not really worth it because you can do better. So either refine that to the EQ, right, the 25%, or look for an entry on a lower time frame, okay? Or, if you're targeting past that, like I said, and you have confidence to trade down here, then it can be worth it, right? So let's jump down to the M1 and see how we're getting on. Okay, so let's see. If you're doing fixed 10R, right, that's not a bad target as well, especially when it lines up with a decent low. That's a pretty good level because we probably could see a decent pullback from there. Or if you target the low, right, the M15 low, we'll call that 17R, okay? I'm not going to drag it all the way down to the 4-hour chart because I don't really, it's not my style, and I don't really want to promote trying to swing for the fences, right, with these unnecessary 50, 100R trades, right? It's just not necessary for consistent and trading and longevity in this game, in my opinion, but that's a rant for another day. Anyway, okay, so what's happened? Well, we had a pretty nice trade. Now, if you are going to trade, this is another lesson I kind of want to make a good example, not a good example of, but this is a good example of it, is hopefully you guys are making notes in this video because I feel like I'm talking about quite a few good mini lessons that hopefully are sinking in, but continuations on the M1. When should you chase price and when should you not chase price if you're going to do it? Because obviously you guys see my bread and butter, and that's a bit of an English phrase, but what I mean by that is kind of, my go-to setups, what I look for pretty much day in, day out, is that price coming into our high time frame POI and getting that initial one, first, second or third entry, and then looking to catch that movement there, right? I'm not so bothered about chasing it in the middle, especially when we get break of structure, right? You very rarely see me chase it on the M1. I'm happy to just let price do what it wants to do, let it hit something, let it start to pull back. It gives me a new range, and I either play the counter trend pullback and then I play the pro trend move. Okay, but whilst it's doing all of this madness, most of the time I just let it be, and ideally I'm already in the trade, so I'm just managing my profits at that point, right? Rather than trying to kind of get in or scale in down here. But if I could simplify when to take continuations and when not to, this leg here is when you do it. When price has come back, it's fulfilled its objective, it's come into supply, right? This is where the overwhelming imbalance between supply and demand is going to occur, right? Where supply is going to be the strongest, right? And this is where you can start to look for those continuations. Obviously, you don't want to be jumping in right near the low, but this is the place to do it. Once we get that break of structure, Okay, you have to start be aware in the back of your mind, well, we've had a 15-minute break of structure, so what do we expect? Well, at any point, we can expect that pullback. Okay, so it's not as ideal to be looking for, chasing those continuations. There, of course, will be times when momentum is really strong and it goes and goes and goes, but you're going to get burnt more often than not. In my opinion, you shouldn't be looking at M1 continuations further than a leg until you are consistent at getting these. It might feel like you're trading an M1 reversal, but the way I view it is it's a continuation. It's a higher time frame continuation. And this is the highest probability area to be looking to get in, highest risk to reward, etc., etc. So until you can get consistent nailing these, don't be trying to chase these moves here, and especially these moves down here, right? Cool. So we'll look at a couple of them of when to do it and when not to do it. So at this point, right, if I was looking for either another entry or a scale in, especially as my risk was removed and there's pretty decent momentum, especially if it was session timing. Let's see. Yeah, see this is not great, right? 9:40s, which means 20 minutes kind of until the end of that kind of main London session. So my trading hours are till about 10 a.m. I'd be kind of, if I was running the trade, I'd be, I'm done. My risk is removed, set my either 10R or at the low. The hard work's been done. I'm not too bothered to look for scale-ins, but I know some of you are a bit more aggressive and happy to trade through. So let's talk through this. Well, two clear POIs I can see, right? This would be the kind of the last unmitigated level from those series of mitigations. So this would definitely be the most ideal place as it currently stands, right? To look to get short from, right? And it's within the M15 flip zone, right? This blue box. Another level we clearly have, right, is this level here. Now it is a bullish candle. Sorry, it is a bearish candle before a bearish candle. So obviously you could go through the time frames or you could refine it to the wick if you want to be super strict, but it's there nonetheless. Okay, they both clearly lead to a break of structure, right? The M15 chock as well. We can clearly see, right, that this reacted from something, right? You can see a reaction from here, look left, does it make sense? Yes, we have this wick. Okay, cool. So now we have a flip zone from the extreme demand level. Is this a flip zone as well? Yes. You can see what it react from. Like, just look, right? Where did the reaction initiate from? Initiated from here. Okay. So they are both technically flip zones. Okay. So you can look for continuations from either of these. Okay. So let's say you want to take this one potentially. What I like about this as well is it swept liquidity, right? Price came down and then took the low, which means this was a high. Price came up, took liquidity behind the high, and then boom. Lovely. Perfect. Cool. So this would be a level, 2 pips up behind the high, and then you could look for a trade entry here, okay? Boom. And then, yeah, there's a confirmation entry there as well, I think. So we've come in, come up, taken the high. Yeah, then we've taken the low, okay? And then that would be your confirmation entry there if you didn't want to take the risk entry. Cool. So I'm going to try and speed this up a little bit now and just stick on the M15 because I kind of want to just concentrate on the hard time frame price action for the rest of the week. And I believe I've been going for, hopefully not, but I'm guessing around an hour and a half. So let's try and keep this under 2 hours. Okay, so cool. So being that trade, we then pull up a little bit higher. So we may have been stopped out on the M1 scaling. We come into the M15 flip zone, right? Remember that one? It looks like we use this as inducement, right? For this zone up here. Let's have a look on the M1 actually. See how that played out. Oh, looks like you would have just stayed in. Yeah, depending on how you got in. Should have been all right at that one. So risk would have been removed anyway. And this is a great example of when I don't really like moving to break even because you would have been stopped out. Don't get emotional. Let the trade play out. And then you'd still be in a really decent trade here, right? You've got just over 13R there to the low. Obviously this trade as well, 17R. Obviously you could have been looking at that, but price hasn't come back, right? Cool, so let's just try and speed this up now and kind of stick to the M15. So what's happening? Well, we've come in, we've pushed up and reacted. So didn't quite hit that candle, but you can obviously, if you see a reaction, right, react and adapt to price, right? Clearly hit this range, you can take the 2 candles. Okay, essentially what that is a 30-minute. You're reading a 30-minute. Let's see if it lines up. Should do, yeah, see, look, 30-minute. Obviously is 2 M15 candles in a 30 minutes, so that's what that is, right? That's how you can read other time frames without going through them. Okay, we've reacted, we've pushed down, so now we have another flip zone. Really like this one as well because it's a sweep zone. All right, price comes up, comes down, comes down, comes up, takes the liquidity behind that structural high because that high calls a low. There's your boom, there's your nice sweep zone. Let's draw it on. Okay. Cool, so you can look for entries within here. Now, again, this is another point, right? You can look for longs from these levels and say like this level down here. But remember what I was saying earlier? If you're going to trade those counter trend moves, you want to do it really before price is fulfilled of its objective. You can play quick scalps within here, but it's a lot lower probability to be trading when one, supply is in control, is counter trend, and you're trading from weak structure, when price has filled up all of that supply. Not really worth it the majority of the time, right? Especially if you're not consistent. Okay, boom. Now we've had our M15 break of structure. Okay, so whereas the new swing range we're playing with, the moment you get a closure below a swing low, the first thing you want to ask yourself is, what's the new range? Draw the new range you're within, okay? So if you draw the box from the low to where it was broken, right, and then drag it upwards, where's the highest point within here? Pretty obvious one this time, okay? This is our new M15 swing high, okay? So we can drag a little template tool to this high here, and then straight away it's just visually easy to see, okay, this is the range I'm playing within. All right, we had a 15 pip pullback, not yet. So before you even think about playing counter trend, right, you want to be thinking about a bullish chock ideally. Okay, boom, now we've had it because we've had a break of structure. What do we expect? We expect a pullback. How can we potentially signify pullback starting? We get a change of character. Price has come down, it's come up, it's come down, it's come up, and then it's taken the high, okay? So there's your bullish change of character. All right, so you can now start to look, right, for longs potentially within here, right, to then play that pullback. But if I look left, right from this wick, and I scroll left, there's nothing on here on the 4-hour chart, the M15. More specifically, there's nothing here on the M15 or higher, right? There's no demand zone here that price is reacting from. So me personally, I'm not really that keen to play pullbacks if I can't see what price has reacted from. There'll be something there on the lower time frame, say the M1 maybe. But for me, especially when it's messy like this, it's just not worth it. I'd just wait for price to come back to the pro trend trade, right? And you can see how price action develops, right? There's this inside bar, you could have been looking for shorts from within here. It was a flip zone that led to a break of structure, not the cleanest. So price comes in, right? It reacts and then it pushes up. So that's the flip, right? And then price comes into that flip and then continues upwards, right? So this is all during Asia anyway, so I wouldn't be trading kind of around this time after New York. Now, if we follow the mitigations, right, this buy to sell range, see it was mitigated and then gone. We have some nice inducement for our POI. It was a sweep zone. There was a flip zone. It led to the break of structure. This is, the level I'd be expecting price to hold if it's going to continue. But I would be cautious that the inside bar is unmitigated, right? And it's still at the extreme, so there is a possibility price could come up a bit higher, right? So there would be the two main POIs I'd be looking for. And let's have a quick look at the 4-hour chart, right? Let's not forget what's going on here. So at this point, what's happened? Well, not quite yet. I mean, demand's fell, but it hasn't flipped to supply just yet because there's no closure, no 4-hour closure below the reaction. But I would be aware it's not the best, okay? But we do technically have a 4-hour supply zone because we have a buy candle that's engulfed by a sell candle, buy before the sell. So this is technically 4-hour supply, and you can start to see that chain happening now, right? And then we can start to look to push price down into either one of these three POIs. Or again, right? There's no guarantee that the 4-hour chart will stay bullish. The daily chart has pulled back into premium, into daily supply. So there's always that possibility, right? We could be taking out all of these daily lows, right? 4-hour lows, I should say. Cool, so let's try and keep saying this, but speed it up. Okay, so we've had definitely more than a 15 pip pullback, so we know that's the swing low. Okay, cool, so let's drum this on quickly. I'm just gonna stick to the M15 now so we can kind of wrap this up a little bit. Just focus on the higher time frame POIs. Okay, so you can look for entries from either of these POIs if they come in. This is all through Asia, still Asia. Okay, we don't quite hit it. Looks like we just missed it. Yeah, just missed it. So ends up just rejecting the buy to sell range. Okay, that's fine. If it doesn't meet your plan, doesn't meet your plan. What time is this? Yeah, around 3 a.m. Pretty rare that euro dollar will do that. Move through Asia, but it can happen, of course. So let's bring it to around Frankfurt Open, kind of when it's most relevant. Okay, around here. Cool. So at this point, right, what's happened? Well, it's tried to break the swing low, but it's failed to close above it. So it's a big liquidity grab. So we're still playing within this range that I've got drawn out. So if I'm looking for shorts, obviously pro M15 trend, what POIs I'm going to be looking at? I'm going to be looking at this. I'm also going to be looking at this because it is still technically unmitigated, and so is that inside bar, right? But this one, remember this sweep that mitigated the prior range? This one here, the one I'm dragging here, would be my favorite by far, okay? This one's a straight push, no inducement. I'll be a bit skeptical about it. However, it did just about sweep liquidity, okay? But they would be the ones I'd be looking at, and a very, very big push potentially here, but I wouldn't like that, okay? Depending on what would happen on the M1. Until price gets up there, I'm not getting involved in this mess. There's absolutely no need to risk your capital in this nonsense down here, right? This is where everyone's getting chopped up. There's weak highs and lows everywhere. Like, just wait for a closure below the low. No closure. No closure. No closure. Boom. Okay, price now finally closes. So what happens? This becomes our swing break of structure. Define a new range we're within. Okay, so where is the highest point? right, from this low after it was printed to where it was broken, drag it up, clearly this movement here, right? So we can put our pretty little blue circle on the highest point. Cool, that's the new range. Drag our tool down, okay? So then this becomes our extreme level, okay? Potentially you could look at this. So at this point, we've had a break of the low, okay? Now if we kind of follow this order flow as well, you can see that this buy to sell here was mitigated, okay? And you have this inside buyer supply here. So, I personally wouldn't be really looking at this, but if you're kind of looking to follow the momentum, on the 1M and stuff, you can look within here and stuff. But really, I'm going to be sitting on my hands for either price to come up to a clear, decent level, or wait for price to come into our demand zones and start to look for longs, right? If we start to get, M15 bullish chocks and whatnot. So now we're getting near there. Let's kind of look within our 4 hour zone and see if we can look for M15 POIs within here, okay? So what do we have? We have this sell before the buy that clearly led to a break of that 4 hour structure, but no inducement in the leg, and it didn't really sweep in liquidity for me. Also, it's a massive zone, so what you can do as well if you want is you can refine it to the wick just to make it a little bit more accurate. But what I do like, a series of mitigations kind of makes sense, right? If you follow them all. I think if this 4 hour zone is going to hold, it makes sense that it would be from that level, right? You can see all of these are being mitigated, and then this zone here as well. Cool, okay, so this one's going to hold, this would be it, but no inducement, no sweep, and not the most ideal, but kind of pretty much have equal lows below, okay? Cool. So that's the level I'll be looking at for longs, but really just sitting on my hands at this point. If I'm not already in a trade, obviously you can manage the trades that you're within, those 2 trades up here from the shorts, unless you bank full profit from here, okay? Cool, so yeah, that whole area is messy, right? Not really an area I'd want to be looking to trade from. Just let it play itself out, and then we start to die off. Now, this is where actually a break of structure. So, though that was a break of structure here, so this is kind of a complex example, right, with structure, and this is the way I view it. So we had our break of structure at this point. At this point when it was broken, right, this was our swing high. Okay, cool. But where is our swing low? Well, actually, we've already had, that's more than a 20 pip pullback. So actually, this was our swing low at that time. So this is why it was really messy. And I wouldn't really want to be looking for shorts within here. Yeah, so what actually happened here is we had another break of structure here. Boom. So then this here became, just gonna delete these for a second, keep it nice and clean. Our swing high at that point. All right, is any of this 20 pips? Nope. Cool. Okay, so now we're coming to our refined M15 POI within our 4 hour POI, but don't forget to zoom out, right? We have a lot of our mitigated demand below. We're coming down with a lot of momentum. We haven't quite hit our daily box yet, which is this box here. We are in the discount, however, for our discount. But if price comes into here, me personally, in this situation, I'm not personally going to want to jump into the first M1 bullish chock right on the M1 time frame. Now this is, again, this comes back to kind of one of the main lessons I wanted to make about with this, is that we try to make our rules as simple as possible with what chocks to wait for, depending on if it's pro or counter M15 and pro or counter 4 hour chart, right? There's all those different scenarios, and you can have it very black and white, and that can really help. But the reason why I like to use a bit of discretion, right, is because it's always going to be a unique overall high time frame story. There will be times where it will be counter M15 trend, like it is now, but it's pro 4 hour trend, and it's in a refined M15 zone, in a 4 hour demand zone, that's in the discount, right? That's swept liquidity. On paper, that could sound really, really good. But when you are allowed to, well, not allowed, but when you are able to utilize your experience and your human judgment, and you can see the overall high time frame picture, you can see there's unmitigated demands below, you can see the momentum are coming down within. Do I need to be first in on a bullish M1 change of character? You have to answer that question yourself, depending on your risk tolerance. But for me, no. There's no need, because one, if it gives an M1 chock within here and then it goes, fine. The odds of price giving an M1 chock and then just going like this to the high are probably slim to none, right? I don't even know what the probability of that is. No one does, but there's no need to. It's going to give you so many more opportunities. Generally what will happen is price will come up a little bit, then it will take the low, and then it will take the high, and then you've got a chock. And now you have something a little bit more to work with, okay? Or at least you see, sustained bullish order flow for a long time. But even then, it would just be an M15 pullback most likely to then go lower. So in this situation, I'm not going to jump into that first M1, but if you do, that's fine. Just make sure it's an aggressive trade. So your management should likely be aggressive. So if you get in long here, right, and price starts to pull back, you want to at least be risk off, or just hit a quick 5-hour trade right to the prior range or a technical target. You can see, okay? But yeah, I personally just understand this. I know some people took an aggressive M1 entry there now, okay? And now what you can see is what's happened is price has reacted to demand, it's failed to put in a high, and it's gone down below, okay? So what happens is now we have an M15 flipping to supply, right? Of course, that's a refined, or you could take the whole range there. I do just want to quickly look at the M1 here, just to explain what I was just talking about there. So, right, we came into our M15 demand. We had, it was a bit better. All right, a down move into M1 supply, reaction to supply, push up, okay, change the character, reasonably V-shape, I'd count that as enough. So essentially you have your M1 entry model, right? That's your flip, and you can look for a long within here, right? Or whether you took the extreme, might have just got swept on that one. And then you've got a decent move if you manage to stay in, okay? Boom, cool. Kind of worked out, but now it's done its job, now it's pulled back. You either want to at least remove your risk or bank your profits or some profits. But if you're looking at a long from here, now when price comes back, this goes back to what I was talking about when we were talking about the M15 range up here, right? Getting long from here is very different from getting long from here. Why? Because at this point, price has already fulfilled its objective. It's already had the pullback. Whereas here, it hadn't really pulled back that much. There's a bit higher probability. Okay, exact same thing on the M1. You're trying to basically call this low against all of this momentum when the daily's potentially putting a lower high as well, with the first M1 change of character essentially. So when price has already had this decent sized pullback up to this like clear supply level and is coming down with a ton of momentum, this is a weak M15 low, right? So the odds of this M1 strong low holding is not great. Now these can play out potentially, but unless you're consistent, these are the trades you want to be avoiding all day long, right? Do not be taking these. Wait for an M15 bullish change of character in these scenarios, and it will save you a lot of unnecessary losses and headache, okay? So now demand is flipped to supply, but the 4-hour zone is still kind of intact. Tapping towards the whole range, right, in this case, instead of the refined supply, and now the 4-hour zone is gone. Okay, cool. So now we're coming down to our next 4-hour zone. So let's look at if there's a refined M15 zone within it. Okay, we have this nice big sweep zone, real decent zone, but yeah, no inducement really in this leg. So not the best, but it's there nonetheless. So we can look for longs potentially from within here. What's the time? Kind of towards the end of the New York session, yeah. So I'd be done for the day. Wouldn't really be looking for any more entries at this point, and it just continues dying. Now, when this happens, right, maybe you want to be the type of trader who jumps on the M1 or whatever and looks for continuations. Fine. For me, not my style. You'll get burnt more often than not, especially when you're trading now against 4-hour and daily demand. Yes, we could come lower, but you have to ask yourself, right, are you going to do that with £1 million account? Maybe. Probably not though, right? It's not worth it. So you want to wait for those easy trades where structure is really, really clear, right? And you have something very, very clear to work with, right? This is just through Asia and spread hours. So just trying to get it towards Frankfurt Open now. Okay, get to about 6-7 a.m. Cool, Frankfurt Open. So at this point, right, what's happened? Well, we've come into that extreme M15 sweep zone. You can even refine it to the wick because that was a bullish candle before a bullish, which it should be the bearish, right? So you can refine it to the wick because there will be a sell before the buy within that. Let's bring this back just to this point here, okay? So we've come into here. Now we've had a excuse me, bullish change of character here, right? Because that was the last internal high. We had a down move, we had an up move, and then all of these candles broke the prior candles low. So then it's just a pullback, and then the internal structure switches bullish. Okay, swing structure, where are we at? Well, I think this was probably a 15 pip pullback. Yeah, so we can mark that out. I'm going to draw on, try and be a bit quick here. That was swing structure, but since then we've formed new swing structure anyway. So we came down here. All right, we had that pullback there, which now means this is the, all right, we had a bearish boss, and have we had a bullish boss yet? Not yet. Okay, so you're coming into kind of Frankfurt. It's not a great reaction. It's quite slow. It's not the best. We have had a bullish chalk. You know, again, zoom out, right? Look at this. Yes, we were very, very bullish up. The 4 hours bullish, but ask yourself, how have we come back down? It's like a V shape straight back down, okay? Look at this. all of that momentum you're trying to trade against now, okay? So you just want to like pick your battles with this, right? Yes, it's pro 4 hour trend, it's in the 4 hour refined demand. So longs are more than valid. And yes, I am looking for longs and I was looking for longs, but just understand it's going to be very, very counter trend and counter the momentum at this point. So you need to kind of just let price build a little bit, right? And don't necessarily have to rush into trade straight away, but also manage your expectations with management. I'm just going to get this daily zone to hide just so it's a little bit clearer. Cool, okay. So let's at least wait for that bullish boss if we get it. Okay, price just about closes above. So now we have a bullish boss. Swing low stays in its place because that's the lowest point that went on to break the high. Okay, so we want to look to get long, right? Nearest M15 supply zone would be this level here. All right. It's not what we wanted. We wanted this. Cool. So we could potentially look for price to pull back up to there or further because 4 hours bullish. The M15 is now aligned with the 4 hour chart, right? So technically now, and this is why I was saying you can look for longs because they're both pro M15 and 4 hour trends and go, right, both time frames are aligned. Now we can target weak structure. Well, as you're going to see, obviously with the benefit of hindsight now, but it's not as simple and black and white as that. Yes, on paper that makes sense and the logic and the theory that we use, but you know, you have to read the whole story. Look at this, the way we've come down, we've mitigated daily supply and premium. You know, there's unmitigated levels below. You know, this is daily weak structure down here, right? This is the weak daily low. It's just not as simple as that. Also, yes, we are mechanical and this is the M15 switching bullish, but it's not the most significant of pullbacks. It's not like we've had a big movement down, a big movement like this, a big movement down, and then a big clear switch of bullish, and then we're coming back in and this level. Okay, that's a lot more convincing, right? Whereas if you kind of look at this compared to like the recent volatility, it's not the best, which is why, again, it's a bit of a drawback, right, to the mechanical rule. But for me, it's fine. It gives me much more than enough of an edge. I'm just explaining how sometimes you need to kind of have that in the back of your mind, a little bit of discretion of realizing, you know, I can't just jump into a long here because it's pro 4 hour and M15 from a 4 hour demand and discount and just instantly expect I can just get long and hold it all the way up towards the 4 hour week high for, you know, 300 hour or whatever, right? It's not as simple as that. That's all the point I'm trying to make here. I'm not trying to make it unnecessarily overcomplicated. Cool. So we have these flip zones here. Why is it flip? Well, because it's reacted from these supply levels, right? So we have that one. It's a little bit, you see how it's all kind of corrective. There's nothing really super clear. This zone here that I just drawn was a clearness, right? Bit of momentum come in, decisional break, but is there anything unmitigated below it? Let's paint the story a little bit, right? You can see nice big bullish order flow continuing. All right, so that gives me a little bit more confidence that this will probably hold. I don't like that we haven't cleared this supply just yet. Would be a bit more ideal if you see that fail. You know, potentially there's this inside bar, but then you could argue, you know, this range has been, it's all a bit messy, right? It's not that clear. And that's why sometimes you'll see me in the morning forecast, right? When it's corrective like this, I'll kind of draw on these little ranges just to visualize the mitigations, right? It creates a range, price comes into the range, mitigates it, continues up, comes back into the range, mitigates it, continues up. Okay, right, like this. We get to work. This sells before the buy here, right? Mitigated, etc. So I go, okay, pretty decent level to look for longs, right? You can take a nice M15 entry here. It's probably in a few pips, yeah, 4 pips, whatever. I'll take the EQ, decent level, and then we can look for longs within here on the M1, right? Etc. etc. So, do you know what? I'm not going to do this because this video will go on for hours. If you want to look at the markups this week, they're all in there. I don't want to get too stuck on the M1. I do just kind of want to talk through the hard time frame POIs because I think there's a lot more lessons within here. So, yeah, start to look for longs within here. Be very cautious that it could just be that M15 pullback. You know, if you kind of ignore the pip rule we use, right? Big movement down. If it's quite corrective, you know, there is the possibility we could go. So that's why 100% would recommend, you know, you look for longs, but just understand. Hopefully you're kind of trying to get the point. It's not super black and white all of the time, okay? All right, so we come back in. Nice reaction away. Okay, so if you weren't kind of convinced by this one, now I'd be a lot more convinced, right? London, Frankfurt volume story is kicking in. We've now cleared this last kind of point of supply here, right? We've broken, closed up above it. So now we can follow the mitigations, okay? Now, I think this one actually gets swept. Yeah, it does. And we come a little bit lower, okay? So this is where it can be a little bit tricky. It is what it is, right? Not everything's going to work out 100% of the time. In fact, I actually took a loss on this. So the way I viewed this might be where it's actually worth going through the M1 here, is, so this first initial move, right, the one we were looking at, right when it turned bullish in M15 here, there was 2 M1 zones I was looking at. So we have, that's not at all we want. we had this flip zone here, okay? And then we had this flip zone here as well. So I'll show you why that flips, and I'll zoom in. All right, so it's sometimes a little bit messy, right? But if you see a reaction and pullback, and you can see a reaction from something that makes sense, right? Whether you draw the whole candle or here, for me, that's a valid flip zone. Again, for here, right, we have this supply. This one's a lot cleaner, right? Clear supply, calls a low, price comes in, it reacts down, and it pushes up. So when price initially switched bullish here on the M15 and we were coming down, these were the two M1 levels I was looking at. Now, you could have taken a risk entry. If you are going to do that, I'd usually recommend always taking the extreme, and you've got to be mindful of that wick as well, so it's not ideal. So I wanted to play a confirmation entry from here, but what happened is it never gave one because price came down. All of these candles broke the prior candle's low, right? All part of the down move, and then it went. So I think there was probably like a 15-second shock within here, but there wasn't an M1. So no entry for me. Cool, no problem. But now we have like a lot of momentum kicking in, a lot more, intense. And we have this new blue box here, right? This is that new M15 POI. So I saw this as bullish order flows continuing, following the bullish order flow, and I was happy to essentially take a risk entry here, and you can see I lost. Now I understand why I lost. All right, you have to be aware that when there's no inducement in the legs, so I'm just gonna use that box to denote, no structure within here, right? That this can become liquidity for below, because if there's no liquidity to take, then it can become the liquidity. Not all of the time. This is where liquidity can be a bit of a pain in the ass, excuse my French, but yeah. So this is where if you were kind of a bit more on the ball with liquidity, you could have potentially anticipated that this low was going to be used for that, and you could have either set a risk entry within here, or look for a confirmation entry within here. This is where it got a little bit messy. So that failed. Obviously, this M15 failed, but then this one still held, and then you can still look to kind of continue to play those longs, right? But it got pretty messy, to be honest with you. We finally, I think, got the M1 shock, right? If you're looking for the CE, right there. Right, price comes down, finally takes it. Now at this point, if you see that as an M1 confirmation entry of this level, where are you going to get long? Well, that's been mitigated. Kind of come up, messed around. That flip has then been mitigated. And then we kind of have this very, very weak move here, and then another pullback, and then we kind of just break it, and then we retrace. So none of it's really great. The only unmitigated POIs that I would view are this level here, but then it's kind of where we touch the distal, so probably take the wick, and that's kind of just the extreme. It's following the mitigations, right? That would be the highest probability if you wanted to take this, but even then I wouldn't really be that convinced. Or you have the flip, okay, so that would be the reaction, and that would be the extreme of the reaction leg, so that's a little bit better. Or you kind of have this decisional up here, which for me would be almost the worst, right? Because it's just weak, it's not great, right? It's kind of three, so at this point that's a very, very weak reaction. I wouldn't be that convinced. But yeah, that's kind of how I view it, and that's why I wasn't looking at any of these trades, and I was just letting price action develop, really. Okay, so nothing's really going on. Okay, now what happens is you kind of get this sort of another M1 breaker structure, right? So now you're seeing kind of the lows really starting to hold. Okay, so you've either got in, ideally, hopefully on the win here from the extreme, right? So the lesson here is, right, when it's super, super corrective, if you're really keen to get involved, you want to be looking at this extreme. You don't want to be looking at this super, super slow stuff, right? It's not worth the risk, in my opinion. But if you see the low hold, right, you're starting to see demand be respected and supply fail, kind of get this another M1 swing breaker structure. Okay, now we have a lot more to work with, right? You can kind of see this move here has clearly mitigated this level. We didn't quite hit the refined candle, which isn't ideal, but you can see it's hit this M2 candle and it's pushed up. It's also a flip zone. Again, it's a little bit messy here, but you have this sort of being the extreme supply, and then you take the extreme of the reaction leg, okay? It's quite a large M1 zone there, so you could refine it to the wick, depending on how big your 2-pip stop is, right? And then that, for me, out of all of sort of this bit of price action, if you took a loss here or if you're waiting and you didn't take the risk entry, this would be the cleanest sort of M1 confirmation entry, stop below the low, that you could take. But yeah, even now, I wasn't in love with it, to be honest, but yeah, definitely a valid trade, and then you're in, okay? So that was quite a tricky session, in my opinion, to get that counter trend longs there. You can see it, like it's just not great. And so about this counter momentum, like, look at that. Like when you really zoom out, it's just sideways mess. It's chop. It's hard. It's not the easiest of conditions, right? When you compare this to what we got on like the Monday and the Tuesday, look, nice big expansive ranges, clear pullbacks, right? A lot to work with. This was a shame, obviously, that it dropped during Asia. And then this was a bit of a mess. There's a few clean entries here in the M1, but the M15 price action is not great, which is why I don't really want to spend too much time on it. And then we're starting to now get that movement away. But again, yeah, this is we're getting into kind of the middle of no man's land. I'm starting to pull back up towards supply, so you can continue to follow the mitigations here, right? Like we get, obviously, this sell to buy breaks this high, okay? Now the reason why I viewed this low as weak, remember this in my markups, is because this low here failed to cause price to close up above it, right? So it's pretty likely it's going to get run, which is what ended up happening, came lower. And then we continue up, right? And then we probably just continue to follow this order flow. So you can see it's more like even though it's pro M15 trend by the rules at least the rules I use, it's acting more like how a counter trend pullback would occur. Like it's very, very choppy, it's horrible. See at this point here where it's like, yeah, end of New York or around New York, and there's no real commitment. It's struggling to break highs. When it does break a high, it retraces straight away. You know, you don't have to force trades within here. Like just take a chill, take a break, come back another day, look at another pair if you want to, but just wait for the easy trades. Wait for it to come up here, or wait for it to give you a nice clear range, rather than kind of forcing the string structure within it. I haven't drawn on all the swing highs because for the sake of time, but yeah, it's not really that great at all. So I'm just going to bring this forward to the next day around Frankfurt, I believe on Thursday or Friday. So where is 7 a.m? Cool. So around here. So this point, this would be swing low. No, it'd be this point here. Okay, I haven't drawn on the swing ranges, but just trust me that this is the correct one. Because basically had a few M50. You can measure the pullbacks in here if you want to do it right. So that's just double check. Yeah, that's the lowest point that took the high. Right. I wish there was a shortcut for this dot tool. Okay, so that's the range we're playing within. Come up, mitigate this level. Okay, so let's have a quick reminder of the 4-hour chart, see where we're at. So we've come into this level here, which is within our daily zone. It's pro 4-hour trend, but look at the momentum coming down. There's no bullish chalk. For there to be a bullish 4-hour chalk, we need to take this inside bar here, right? Because that was the last internal move, right? With a down move, an up move, a down move, an up move, a down move, and then we kind of come back. It's quite. It's not the most convincing of reactions. It's kind of a bit decent. It's moved a decent way, but look, big impulsive candles, blah, right? It's a bit crappy. Let's be honest. Price came in here, it reacted, and it pushed down. So there's your 4-hour flip. All right. So this is where it's all getting a little bit conflicting and messy. And generally, it's very, very rare that you'll get kind of price just kind of come in and then just go. Like I said, right, usually you get a bit of a build of liquidity. It takes the liquidity, then you get a chalk nearer the level, and then you can start to go, right? It takes a little bit of time, especially when you get a big range and a big sharp pullback. It's rare that it just comes down and comes up like that. Coming to this level, so you could view that as a decent level to either push down into here or potentially anticipate we're going to switch bearish again because of what the daily's doing, right? It's all a little bit tricky at this point, to be honest with you, because it's pro 4-hour trend, pro M15 trend, but we've had a pretty weak pullback into a flip where sort of the 4-hour supply is still in control, right? Because supply's been holding this entire week on the 4-hour chart. We've reacted from demand, so demand might be about to take control, but really it's not confirmed kind of until we get that first 4-hour supply level failing, right? So coming into this session, I think this is Thursday, I lose track. Let's see, 20th, I think this is Thursday, I believe. So London, Frankfurt, we start to move away. Okay, so ideally, I believe I was looking kind of for more the extreme, right? This made a lot more sense. For price to come down into this level here, right? Kind of following the mitigations, the extreme, yada, yada, yada. This would have been the level I would have been looking at. Price starts to move away. We've had a bullish chalk there as well. I mean, technically it's not one actually, because all of these candles break the prior candles high, so you can kind of ignore that if you want. So when price starts to move away, what I often do is just react and look left if I've missed it and go, okay, what reacted from? What's this low reacted from? It's reacted from those sell to buy wicks. Okay, pretty insignificant, but you can see it would have been, a much clearer flip if you include the wick, right, on a lower time frame. Not the best. We're moving away from it. Okay, cool. Maybe didn't get an entry within here. It's all pretty weak. Doesn't matter, right? It's not even London open yet. Don't get FOMO if you start to see the move, right? Just chill out. Wait for something clear to happen. Okay, boom. A lot of momentum. We break and close above the M15 swing high. Okay, we pull back 15 pips already, not quite. So where's our new swing low? Lowest point that broke this high after it was printed, which would be this low here. Okay, cool. So again, this is where it gets a little bit tricky, because we're pro 4-hour trend, pro M15 trend. So should be super high probability to buy from the M15 extreme from demand, right? Correct. That's the way, I'll be looking at it and thinking about it as well. But this is where the art comes in, right? Of trading, of, again, understanding the whole higher time frame picture, the whole context. 4-hour chart is bullish, but how we got here, I want to keep just really drilling this into our minds. And this is me also, I'm not just telling you this, trying to act like I have I'm a master of trading and I understood this is exactly what was going to happen, because I took losses in this. I got, a little bit, caught up with trading pro 4-hour and M15 trend and getting very aggressive and kind of not, I'm aware in the back of my mind that it's not the most ideal, especially with this momentum. But, the most objective and mechanical thing that I've kind of, when I'm doing my review and talking now that I've come out with is, well, 4-hour supply was in control the entire week. And yes, we reacted from demand, but it's now come up to the nearest point of supply, right? And we haven't had a 4-hour supply fail yet. And now we've come into here. We've had a very, very corrective pullback when you kind of look at the overall swings. If you forget about the 15 pip rule for a bit, right, and you just use a little bit of discretion here, right, maybe now that bullish trend, but by the sort of more quote unquote aggressive way we use it with only 15 pips, has fulfilled its objective now, and now maybe it's ready to come. Of course, I'm using that with the benefit of hindsight because, as some of you will be aware, and if you're watching this at a later date, you'll soon be about to see, we do end up switching bearish. Okay, so whilst I still think it's still valid to look from longs from within here because it's pro M15 trend and pro 4-hour trend, we have to ask ourselves, right? Hopefully you can see why it's not that great, and maybe this is the time where you kind of want to sit in your hands a little bit and maybe not take it. And also, if you're going to trade those counter trend moves, right, counter to M15, counter 4-hour trend, this is the place to do it because hopefully you can see why. 4-hour supply is in control, etc., etc. Momentum's a downside. We've had a corrective pullback. All of these corrective moves, right? Mitigating demand. I can't say that quickly. It's a tongue twister. Essentially means all of the demand in here has all been absorbed. So if we are going to come down, right, there's a vacuum of orders basically. There's no demand to absorb the supply. So if we are going to come down, then that's a pretty decent move, okay? I'm getting a little bit ahead of myself here, but it's just kind of, coming into this point, you have to think, yes, it's pro 4-hour trend and yes, it's M15. So on paper, on your trade plan, on that checklist, it could look amazing. But you have to ask yourself, is it going to be, is this long here going to be the same as this long here? Risk to reward up to here is way more on your side, right? It's when we've just mitigated this level. Whereas now we've had that corrective pullback, potentially, the objective's been met, and now we're going to go, right? These are all things you need to bear in mind. Now, you don't have to do any of that. You can just be super simple, super mechanical. It's pro 4-hour, it's pro M15. This is extreme demand, led to a break of structure. I take the trades. If you do that day in, day out for a year, I can always, there's no guarantees in trading, but I can always guarantee you are going to be profitable. So it's not the end of the world if you take losses here, but it's just about understanding and I guess not being frustrated. Just knowing that this is nowhere near as high probability as doing earlier on, right? I think you guys definitely get my point now, right? Cool. So then we take the high, okay? So if we're waiting to play a counter trend move, what can you do that's a little bit more, my mind's going, this has been too long, I'm doing this video. You guys are probably lost as well, but wait for an M15 shock, right? If you want to play that counter trend pullback. Okay, boom, we get it. There was an entry here on the M1, but it wasn't, was it here? Let's see. This data feed is actually slightly different to what I remember on the usual one I use. It's funny that. Yeah, this looked a bit different. And even though they're both Forex.com. That's odd. But anyway, yeah, there was, let's see, I think because this is where we get, the price comes up and sweeps. Yeah, this data feed is different. It's a bit concerning because it's Forex.com that I use on both charts. I'll show you what I mean in a second. Let me just, Okay, so this is where there was that aggressive continuation, is because we came down, we swept a high, and then we pushed down, right? And then there was a short here. Again, this is not a trade I took or I would necessarily advise, but just to understand the continuation here. I'll just quickly show you this on the M1 on my charts. So let's get to where Thursday was. Yes, this move here. So we had this quite corrective movement down and there was flips within here. And this was a valid flip. Yeah, and that's the trade we're just looking at. It's odd that's changed. So markups, cool. So anyway, you basically, the point here I'm trying to make is if you had let's just imagine there was a nice short entry or there wasn't, and you wanted to trade that counter trend because it's counter M15 and counter 4-hour, which sounds very, very risky, but hopefully you can understand in this sort of scenario, an example with this week, that there's different times, right, where it's not as risky, where you've now had an M15 shock, you could start to play these entries short, right? This continuation here, right, sweeps, pushes down back into that zone, and you can continue down, right? If you're going to do it, that is when to do it. And if you took a long from here, right, and you took a loss, it's not the end of the world, right? I just want to stick to M15 now. We can kind of bring this into the week because this video has been going on for pretty long, but hopefully kind of getting the main themes, I guess, from this lesson that I really wanted to drive through of yes, have those black and white rules on your plan about maybe what to do in certain scenarios, depending on the M15 and the 4 being pro, counter, one being pro, one being counter, when they're both aligned, etc., etc. But yeah, it will come with time and experience to know when to kind of how far to manage your expectations, when to be aggressive with entries, and when not to. So yeah, the end towards the end of this week, it did get a little bit trickier, definitely. So then we got bearish again, right? So a few POIs to be looking at. We've got the extreme up here. Nothing else is really that clear at this point. Reacting from demand. Okay, so we push down. So now at this point, right, when we pull back up to that 4-hour supply, remember the 4-hour supply has been in control the entire time, and now the M15 switched bearish, and we've seen all of these mitigations, right? And I'm saying there's likely going to be a vacuum here. Or more importantly, let's just keep it even more mechanical, right? Because that's a bit subjective, right? We don't know. There could be orders within here, right? We never really know. But what is a bit more mechanical is that this 4-hour low is likely not going to make the 4-hour swing high now, right? If we look at the 4-hour chart. Right? We haven't even had a bullish chalk on the 4-hour chart. Supply's in control. So it's pretty likely, especially now the M15 switched bearish, we had a bit of a corrective pullback, that this low is going to be weak. And it's pretty likely that price is going to want to take that. So that can give you really good trade ideas to look to get short and target down towards that level, even though it's counter 4-hour trend, right? Essentially, this becomes that weak low. Now, it doesn't have to do that. Price could literally, mitigate something within here and then push up and take out the swing high, and then, it would have ended up becoming strong. But we can work with a decent probability that, with this move, the M15 switching bearish, supply holding, that is probably going to go. Okay, cool. So we've had a flip here. So you could look at this, but it's quite low down in the leg. So there's a lot of unmitigated stuff above it. It didn't sweep liquidity. It has no inducement, but definitely a POI you could look for. Okay, and this is another one I wanted to talk about because you see how price pushes down and it closes below it. So there is a possibility you could look at this POI, right? And it could continue, but the way I view it is that this is a weak high. It's failed to do its job. So it's likely this is going to be run or use as inducement for a POI. But also remember what I was saying at the start, if you're going to be aggressive with continuations, we've just had an M15 boss. So whilst this could continue going, what's the risk to reward and probability on your side? No, you have to expect a pullback. And generally those pullbacks are going to come in and mitigate the prior swing range, right? From the swing low and the prior swing high. So this is a little bit better. This definitely isn't. You don't want to be looking at continuations here really until you are consistent. You want to be looking at the moves up here and then wait for the pullback, right? Cool. So price comes up, smashes through that flip. And then, yeah, we ended up reacting from these buy sell wicks. There was some beautiful sort of M1 entries within here. But yeah, I personally didn't really view this as a significant enough zone. It didn't flip, it didn't react to anything. It did lead to a break of structure, but there's no sweep, there's no inducement. So I was personally waiting for the extreme to be met and missed this. But then, yeah, it all got pretty messy. There were nice few clean M1 entries within here, but you can just see, right, failing to take the lows, blah, blah, blah. Obviously came up and reacted from this supply. I'm not going to get a little bit quick here, but this is just because this is not, in my opinion, price action that's really worth spending a lot of time looking at. There's entries within here on the M1 and you can get advanced and you can make these moves, right? But yeah, and then we ended up taking out that weak swing low. And then I don't think price actually made it to our refined 4-hour wick. So let's bring it to about 7 a.m. on the Friday. Okay, so this wasn't a 15 pip pullback. Or was it? Don't think it was. Yeah, not quite. So that's not swing structure, but it was a bullish chalk. So just make sure we got the swing structure in the right place. This obviously was. Right, so that was break here. Okay, so we're almost there, guys. We're almost there. Well done if you made it this far. You will, I was going to say get a gold medal, but no one wants that. Right, no time for crappy jokes. My mind's starting to lose my mind a little bit. It's kind of hard to record videos this long. Cool, so if you're still with me, we are within this swing high here and this swing low here. We've had a pretty strong V-shaped reaction, but if we look left, have we mitigated anything that's significant? Not really on the M15, nothing that great, but remember, right, we are on the 4-hour chart within this entire big sort of sell to buy, right? It's already mitigating stuff, I don't really like it, but you do have to be aware that nonetheless it is valid 4-hour demand and we are within that daily candle. But actually there's a 4-hour flip zone here, right? Came into demand, we reacted, fell to put in a high, closed below the reaction. So now we have this 4-hour, disappeared, 4-hour flip zone here. All right, it's a bit messy because I like the buy to sell candle, but obviously where there could be stuff in that wick as well. But yeah, there we go. Cool. So high probability position would be to look for shorts within this M15 supply here, because if you follow the mitigations, right, this is the extreme. Last mitigation we pushed down. What also did it do? It swept the liquidity behind this high, right? Because we had a down movement, an up movement, a down movement, came up and took the liquidity behind the high. It's a bit messy, but then we go down, okay? We have inducement here, led to obviously a break of structure. It's at the extreme, last mitigation, right? That becomes your highest probability level. But of course, price could react from the supply here, which yeah, already has done. Okay, so that's another level as well. Okay, so I know some people look for some shorts from within here, right? And there was an M1 entry within here, but then when price came down and then reacted from this sort of, you know, I guess extreme of this leg, this pullback here, right? And then pushed away, because the internal structure is still bullish, right? We had the chock here and there's been no bearish chock since, right? We've continued that bearish structure, right? There's no bearish chock when it comes down, because from this inside bar, all of these candles break the prior candle's high. Okay, so this is literally one internal move. We've had one movement, all these candles break the prior candle's high, then we pull back, and then all of these candles break the prior candle's high. So at this point, this low here has to go for there to be a bearish chock, and obviously it didn't. It's mitigated kind of that extreme demand and pushed up. So if you have any orders left to sell from this point, you're trying to trade after kind of prices come down and done its job. So now it's very likely you're going to get smashed, right? Why? Because this is a weak high, because it's failed to take out the internal low, right? So at that point, you want to cancel any orders. It's very likely this is going to get run, and we're probably going to come up to the extreme. Why? Because then when this high does get run, let's see, we get a closure. Now, why is that closure important? Well, it closes above the reaction. This was the initial reaction, right? So now price has closed above it. What does that mean? Well, the reaction fell to put in a lower low. So if we draw across from the reaction like we do for flip zones, right? Technically, anywhere within the sell to buy, now price has closed above it. Anywhere within here, right? If you took the distal to the low, obviously I would never do this, but that is technically your supply to demand flip, right? The reaction from supply fell to put in a lower low, price is closed above it, so now we have demand. Obviously, you'd be much better refining it to this candle here, and you could look for an aggressive buy within here, right? Up to around this region, or it's pro 4-hour trend. Maybe you want to anticipate, that long now. I wouldn't necessarily advise it. I'll be more concentrating on the shorts from this zone here. Okay, so there were some M1 entries within here. Managed to catch the short in there. I won't dive into those at the moment. You guys can check those in the markups. So yeah, nice short within here. High probability position trade in my opinion. Even if it's just a quick trade, because it's from the extreme, right? It's always going to likely give you a decent reaction that I think personally is worth trading. Now, if you want a little bit more confirmation, what can you wait for? You can wait for an M15 chock, and you can see if that kind of M15 demand chain is going to fail. By the way, if you're wondering, well, what did this react to? This low, I mean, it's unnecessary, you don't have to do this, but just look left. Okay, we have sell to buy wicks. Okay, that's demand, but is that demand significant? Well, it reacted to these buy to sell wicks here. All right, just following the story, right? In, down, reacted. Did that react to anything? Let's see. All right, oh yeah, there's that unmitigated inside bar from before. Remember, we drew the range, but we knew the inside bar was mitigated. Okay, now you can follow the orders. You see how the orders work in the market? Comes into demand, reacts, push down. Okay, there's supply, comes in, reacts, demand takes control, back into that demand, and then we stay kind of in control ever since. So what I was looking for, I was already short, but once this zone here failed, it's very likely at that point, because I was viewing it like this, right? It's very likely that the demand chain has now failed. You would have got a bearish chock, and then it's likely you can start to target this low. But what ended up happening, just put it forward, right, is we got that chock here, and I saw this as pretty high probability that now we've had a bearish chock, we've mitigated extreme M15 supply within the 4-hour supply, we've reacted to the last part of that demand chain, right? We reacted here, we failed to put in a higher high, right? And then we push down. So anywhere within that reaction, or you can refine it to here, is a decent flip zone. Okay, so I viewed that as a pretty good, decent level to get short, or obviously the extreme as well, refine it to that wick, with 2 decent levels for those pro trend moves. But what ended up happening is it reacted from something within this wick. It was a bit clearer on the M5 and the M1, and then it ended up just blasting a bit higher, gave a bit of a reaction from the extreme supply. But now, again, with the benefit of hindsight, when I was looking back, this was a pretty crap supply zone because, it's a bearish candle before a bearish candle, 1. 2, this candle didn't really, the next 2 candles didn't even close below it. Even if you did take it from this wick, it kind of already been mitigated from here in the distal. It's not great. Now, at this point, if you want to understand what's going on, well, what's happened here? Well, we had this supply zone, right? Hopefully you guys will follow me now, because we had demand here. Let's draw it, right? We had demand here, price came into demand, it reacted, and it pushed down, okay? So we have this supply zone here, this blue box, price comes into it, it reacts, and it pushes up, which also gave us a bullish M15 change of character, okay? Hopefully you follow me here, right? Came down, came up, came down, we got the bearish chock. This was the last internal high. So then we came into supply, we reacted, we pushed up, which gave us a supply to demand flip and a bullish chock, right? So this is where it gets a bit messy and advanced, but essentially you have that demand within here. Price reacted from it and then pushes up. Okay, so then what you also have is the reaction from this extreme supply, right? This bearish candle then becomes another flip, right? So this is where, if you're still looking for shorts at this point, it's just getting really, really messy. You're trading against the V-shaped reaction. And this is just where it was just horrible, really. Kind of Friday, this is where I just wait for price to be a little bit clearer, taps into the demand and then pushes up higher. The 4 hour then supply fails, obviously, so is the M15. It fails to close above the M15 swing high, and this is where I was just like, definitely want to be done for the week at this point and just come back next week, because on a Friday afternoon, or New York, I should say, it's rare that you get good moves. Obviously it can happen, but for those who have been in London, the city of London, if you go anywhere around the financial district, the pubs are full from about 2-3 p.m. in London time, which is sort of early New York, right? There's not big business being done. There's not a massive amount of commercial volume going through. Obviously, that's a bit of an anecdotal evidence, but generally, if you test this right, you'll see that just Friday afternoons, take it off. There's no point in forcing trades, especially when it's looking like this. So anyway, we came into the extreme, swept the external range liquidity behind the high, and yeah, you could have looked for shorts within here, but it kind of just brings us in the week, and that's like, do you really want to be getting involved in that mess? Not high probability in my opinion. Okay, so yeah, last few days of the week was pretty horrible, but hopefully you guys took a lot of value from that. In terms of the real big points here is that you can have those nice simple rules in your plan of what to do when it's pro 4 hour and M15 and counter and all that stuff, but just understand this will come with time and experience, right, of when to read the overall high time frame story. And that's what I mean by it. Understanding the daily's pullback, it's likely potentially filling a daily lower high. We're working within a massive 4 hour range. There's plenty of risk to reward to be taking those counter 4 hour shorts. Also, technically we might be bullish here on the M15. Okay, that's cool and be mechanical, but in the back of your mind, be aware, come on, that's one big push down. And what is this? This is just, mess pulling back to correct the pullback. Then we come within here. Decent probabilities now to look for shorts to take out this low. Okay, maybe it's a little bit aggressive at that point, so you can wait for the break of structure, right? Okay, now M15 is bearish, it's aligned. Okay, and now once it pulls back in, then you can look for the shorts to now, boom, take out that low, okay? But yeah, these are the easy trades, right? Remember those 2 trades we're looking within here? Technically you could have held them down there for a shit ton of profit, but I'll leave it there because I'm literally about to lose my mind at this point. Hopefully you guys have taken value from that and followed it through. I would recommend going back through this and taking some notes and yeah, let me know what you thought of it, and we'll see you next one. Cheers, guys.